Hi guys. So I hope your preparation was rock solid for the upcoming exam, and yes, I'm very excited now. For next 1.5 to 2 hours, I will be focusing on one of the critical chapter, that is items of financial statements. And trust me, the way we are going to revise this chapter, the order in which that we are going to revise is something different. I want every one of you in the coming exam perform minimum 12 to 16 marks of this particular chapter rock solid, just based on this. All that you have to do is this particular topic that we are going to revise now, 1.5 to 2 hours. Revise it. Whatever the observations and points I'm specifically focusing and explaining, please go back and then revise it immediately for another 1.5 hours. And trust me, in the next exam, you can write 12 to 16 marks of the paper. That's it. Fine guys, so without any delay, let me begin the session. I don't want to waste your time, so let's directly go into the session. And before proceeding further, just comment below where are you coming, where are you watching this from, and please like the video, and it will be recommended to more and more students. Just like the video. That's it. Okay guys, let me proceed. So the topic of discussion right now is audit of items of financial statements. And if you see how I'm going to discuss this, first I will be discussing about additional regulatory information. First I'll be discussing about something called additional regulatory information. Then I will be discussing audit of P&L items. Then I will be discussing audit of balance sheet items. First, additional regulatory information is what I'm going to discuss. If those of you who do not have any idea, this is nothing but, if you observe below fixed assets, below loans and advances, below capital, okay, below other expenses, at so many places at the disclosure requirements, wherever they have given disclosure requirements, there additional regulatory information, this is something a schedule 3 disclosure which is to be shown additionally as a regulatory information. Like that, some points were there. For example, you might have seen a corporate social responsibility expenditure related disclosure, important ratios disclosure, and funding party intermediary beneficiary transaction disclosure, like that. So first we need to finish that. Once we finish that, then we'll go to P&L item and balance sheet item. But before I start this, I will also give you an idea about assertions topic. Remember, I told even in the introduction to this previously also I posted one video saying you must refer SA 500 standard in my previous marathon. My previous, whatever in the timestamp, whatever it is there, if at all you are watching a merged version of this, then different thing. So SA 500 standard, inside that we have audit evidence chapter, right? Yeah, very good. Many people are watching from Kerala, Chennai, all that. Yeah, good, nice. So if you observe SA 500 in your CA Institute book, audit evidence chapter is there, right? Inside that there is a topic called assertions. That understanding is most important for understanding these two, but nothing to worry. I will give you a brief idea about that assertion topic and then only I will proceed. Okay, fine. First, let me begin regulatory information, additional regulatory information. Okay. Now, first I will cover items of financial statements for the day. If time permits, I will also take different types of entities. I don't have an issue. I will cover different types of entities once first to be successfully finish this particular topic. Now look at audit of items of financial statements. So inside this, first I told you I will be covering additional regulatory information related points. In the entire book, additional regulatory information, something, there is a concept called additional regulatory information. For example, the first time the additional regulatory information that is there is below share capital. What is there in the below share capital? You know, you have to give a disclosure related to, just 1 minute guys, yeah, you have to give a disclosure related to funds advanced loaned invested to intermediaries, funds received from funding party by intermediary. So regarding this, there is something called additional disclosure that we need to give you. I hope until now, whatever I'm going through, everyone, are you with me? Just tell me whether you're all having a proper, is the audio, video, everything clear? Just confirm me. Like clear, you can just reply me saying clear. Comment, just comment saying clear. I'll understand. Let's not hurry up. Let's neatly discuss every of this. Yeah, perfect. Perfect, guys. We'll proceed for the. So, we need to give additional regulatory information below share capital. A similar requirement is there even below borrowings. Even below borrowings, this kind of requirement is there. What we need to disclose? If you remember, in audit report, you have a topic called reporting requirement. In audit report, you have a topic called, just a minute. Yeah. In audit report, you have a topic called legal and regulatory requirement, or we also call it as other reporting responsibility, legal and regulatory requirement. Inside this, 143 subsection 16 enquiries, 143 subsection 3, 143 subsection 3, these are all called as checklist items. Inside this 143 subsection 3, clause J is there. Inside that, subclause D is there, right? Here you might be having, you might have seen, you might have come across one of the toughest point, whether the company acted as a funding party, funded loans to intermediary, where intermediary has to fund to somebody else, like that. So what exactly that I will tell you. And again, 143 subsection 11, this is what? Caro, guys, where 21 matters are discussed. Okay, fine. I'm not touching this because our point of discussion is regarding audit report and related point discussed in the financial statements by management as a additional regulatory information. Look at, if you have not seen this point earlier also, doesn't matter, just pay attention to what I'm saying, you will really understand. Okay, there is something, there is, for example, we are doing audit of one company, so we are the auditor of the company, right? Let us assume this company transferred amount. Let us assume this company transferred some amount. To whom they transferred? Another entity, which may be a foreign entity, What this entity has to do? This entity has to lend to, or has to invest in, or has to provide a guarantee. So to whom? Just a minute. Lend to ultimate beneficiary, invest in ultimate beneficiary, provide guarantee to third party on behalf of ultimate beneficiary. Who is ultimate beneficiary? Who is this ultimate beneficiary? This beneficiary is identified by funding party. This beneficiary is identified by funding party. Who is funding party? Our client. We are doing audit of one company, right? That company. So this company has some beneficiary. We call them as ultimate beneficiary, means another company. Now, instead of this company giving money directly to that company, what our client did? Our client transferred the money to an intermediary, another entity, which may be foreign entity, which may be Indian entity. But this particular mediator, we call them as intermediary. What our company did? Our company transferred funds to intermediary, where the intermediary has to send whatever money we gave to that company, that company has to transfer these funds to another entity, ultimate beneficiary, either as a loan, or as an investment, or our beneficiary should get some benefit at the end of the day. So our beneficiary will get a guarantee service from the intermediary. What intermediary will do? Our company, some beneficiaries are, right? That beneficiary might be purchasing goods from somebody else. Now they won't pay any money. This intermediary will provide guarantee to the third party on behalf of ultimate beneficiary. I hope you understood this. So our company will give money to intermediary. That intermediary will have to give the money to beneficiary. This is the transaction. We don't directly give to the beneficiary. We use some mediator. That mediator either give a loan or give investment in the beneficiary. Okay? Or this intermediary will provide to third party. This intermediary will give a benefit, will give a guarantee to third party, so that beneficiary will ultimately get a benefit. This is the transaction. Now here, where is our client? Our client is either this company, or in this entire chain of transactions, our client may be the intermediary. If at all our client is a funding party, what disclosures in the schedule 3 they need to give? If our client is an intermediary, what disclosures they need to give in the schedule 3? This is what the question is about. Okay, the question is about this. Look at, our client, for example, no, if at all our client is a funding party where funds are loaned, advanced, invested to intermediary. If at all the question is funds advanced, loaned or invested to intermediary, means our client is acting as funding party. If our client is acting as a funding party, our client has to disclose the following information. What information they need to disclose? They need to disclose date, on which date how much amount is loaned or how much amount is invested in intermediary. Here you see our company transferred to intermediary, right? On which date and how much is the amount. This disclosure, first disclosure. Second, intermediary, what they need to do? They need to transfer it to beneficiary, right? Look at that. How much further? We need to give details of further investments or guarantees by intermediary to ultimate beneficiary. Now here we gave funds to this entity. What this entity is doing? They are either lending, they are either investing, or they are giving guarantee. That detail. Second one, details of further investments, loans or guarantees by intermediary to ultimate beneficiary. Then what is the date and amount of guarantee by intermediary? So what is the date? How much this is regarding first one, details of investments, loans or guarantees by intermediary, and date and amount of guarantee given by intermediary. And last one, a compliance declaration. They need to give a declaration that, under FEMA, under Companies Act, under PMLA, the company has to give a declaration that we have complied with the FEMA guidelines, Companies Act guidelines, RBI guidelines, all that with respect to these transactions. Simple, guys, very simple. If our company is acting as a funding party, we need to give the following details. What details we need to give? We need to give details of how much amount we invested or loaned to intermediaries and the date. When these intermediaries are lending or investing or giving guarantee to beneficiary, date and amount of guarantee given to the beneficiary, and declaration by the company that they have not complied. Declaration by the company that they did not, there is no non-compliance, or declaration that they have complied with FEMA, Companies Act, RBI, like that. So these disclosures are required if our company acted as a funding party. Now, second one, for funds received, for example, for funds received from funding party, for example, our company, our client is acting as intermediary. Here our client is acting as intermediary, whereas here our client is acting as funding party. If our client is acting as intermediary, we should give details about who is the funding party, who is the ultimate beneficiary. Simple. Look at date and amount received from funding parties with the details of funding parties. So if at all I am acting as an intermediary, I should give details of funding party. Look at, so on which date, how much amount I received from funding party. Further, details of further investments, loans, guarantees by the company on behalf of ultimate beneficiary. How much amount I invested in, how much amount I loaned, how much amount I given guarantee on behalf of ultimate beneficiary, and date and amount of guarantee by the company to ultimate beneficiary. Same details here, just that here I am acting as an intermediary. See, suppose if I am a funding party, I should give details of intermediary, I should give details of the beneficiary. If at all I am an intermediary, I should give details of funding party, I should give details of beneficiary. I hope you are able to understand. If I am funding party, look at it. If I am funding party, I should give details about, if I am funding party, I should give details about intermediary, I should give details about beneficiary. Suppose if the client we are auditing is an intermediary, then they should give details about funding party, then they should give details about ultimate beneficiary. This is the logic. What details they need to give? Details of, for example, funding party. Our company is acting as a funding party. Then who are the intermediaries? What amount we gave? When we gave? And when are they going to make further investment in ultimate beneficiary? Guarantee and amount of guarantee. Declaration that they complied with everything under FEMA. Suppose if our company is intermediary, then first point alone will change. Only first point. On which date, how much amount I received from funding party. Then I have to give details of further investments in intermediary. Date and amount of guarantee given to the further investments to the ultimate beneficiary. Date and amount of guarantee given to the ultimate beneficiary. Are you clear? And compliance declarations for FEMA, Companies Act, prevention of money laundering. These three acts you must quote, guys. A compliance declaration under FEMA, Companies Act, Prevention of Money Laundering Act. That's it, guys. First additional regulatory information is done. First additional regulatory information is done. Somebody is asking, sir, is there any change in my GOAT Notes 2025-2026 edition? No, guys, there are no changes at all. Just at some places, abbreviation has been updated. That's it. Wherever sufficient appropriate evidence that board and all is there, we just replaced it with SAAE, sufficient and appropriate audit evidence. Except that in the GOAT Notes of 25 and 26, there is no significant change. That's it. So this is the first additional regulatory information we completed. I hope every one of you are confident. Just mention that ARI, additional regulatory information, funding party, yes, done. You just mention that in the comment. Next. Then the next additional regulatory information. In fact, in the entire additional regulatory information, this part right now we covered, right? This is only very complex. Now we are going to discuss remaining additional regulatory information, which is dead easy, not a difficult one at all. Next, look at borrowings. With respect to borrowings, we should again give some additional regulatory information. With respect to borrowings, we should again give additional regulatory information. Borrowings, what we need to give declaration. Suppose no, you are borrowing with a security by current assets. You might have remembered this point in Caro. If the company has got any working capital limit, did the company got any working capital limit in excess of 5 crore? Okay, you might have seen. If so, the auditor has to report whether quarterly statements, quarterly returns filed by the company with the bankers and FIs, are they tallying with books of accounts? Remember in Caro, that reporting requirement apply only when working capital limit is more than 5 crore. But here, this is additional regulatory information for the company which management has to give. Whether or not working capital is below 5 crore or more than 5 crore doesn't matter. Whether or not below 5 or more than 5 doesn't matter. First understand that. Remember, additional regulatory information is a Schedule 3 disclosure we are talking about. It's something which management has to disclose in the financial statements notes to account. This is not about auditor reporting requirement. CARO 2020 is an auditor reporting requirement as a part of auditor's report. Please be clear on this particular aspect. This is most important. Now, here you need to give a disclosure. What you need to disclose for borrowings? Which borrowings? Those borrowings which are secured by current assets. Borrowing secured by current assets means generally they're nothing but working capital limit like cash, credit, overdraft, like that. Okay, what we need to disclose? Who should disclose? By the way, here management should disclose. What they need to disclose? They need to disclose a fact. What fact? Companies, they file quarterly statements of assets and current liability, current asset information they file with bankers. Now, why they need to file quarterly statements? In bank audit chapter, you might have seen drawing power has to be calculated based on latest stock statement, and the stock statement should not be older than 3 months. Have you seen that? Yes. So stock statement should not be older than 3 months. You might have seen, right, in bank audit. 3 months means what? For every quarter is nothing but 3 months. For every quarter, a borrower has to submit to a banker quarterly statement regarding statement of current assets and statement of current liabilities. Based upon that, working capital amount is decided. Based upon that, drawing power will be computed by the banker. Now, what many businesses they are doing, in their books of accounts, their net working capital, current asset minus current liability is just 10 crore. But when they file with bank, no, they will inflate it. What they do? They will inflate it. 12 crore, 13 crore they used to show and then file with the banker. In this way, many businesses, many companies are overstating net current asset position to the banker and getting additional drawing power. Now, by mentioning this as a Schedule 3 disclosure requirement where board of directors have to honestly disclose this, that practice is prevented. Why? Today, board of directors have to clearly tell in the notes to accounts whether quarterly returns, quarterly statements filed with the banks and FIs are in agreement with books of accounts. Oh my God. In books of accounts, what is your current asset and liability, and what is the amount that you showed within the documents filed with the banker? Q1, for example, the company has to disclose, for example, ICICI Bank, Q1, net current asset position filed as per quarterly statement 12 crore. As per books of accounts, net current assets 10 crore. The difference 2 crore. Why this difference is there? You should not have a difference between books and statements filed with the bank, right? Why there is a difference? You need to give a disclosure like this. Now, because of this requirement today, most of the companies silently disclosing original asset value rather than inflated value, where earlier they inflate this position and get more drawing power. Now that is prevented. This practice is curbed. Okay, look at. And if not, what do you mean by if not? If not means they are not in agreement. Like quarterly returns, quarterly statements filed with the banks and FIs, they are not in agreement. If not, we need to provide a summary of reconciliation and reasons for material discrepancies. If there is a discrepancy, we need to give a summary of this. Remember, a similar point you might have already seen in Caro clause number 2, clause number 2 inventory, in that subclause B. There, auditor also has to check this and then give his opinion whether company is filing correctly quarterly statements with the banker. Is there a difference between this particular statement and books of accounts? If so, auditor also has to point out this. More than auditor, management has a disclosure requirement. More than auditor, management has a disclosure requirement like this. I hope you're clear. Next. This is first thing. Now remember, in Caro, for auditor has a disclosure requirement. Auditor has to give an opinion on quarterly statements, agreement with books of accounts. This logic only when the working capital limit is more than 5 crore. Whereas here, the management has to disclose it the moment they have a loan based on current assets. That's enough. Is it more than 5 crore, less than 5 crore? Remember, the 5 crore limit also in audit report is based on sanctioned limit, guys. Not outstanding amount, not drawing power, guy. Sanctioned limit, guys. That's it. Then another disclosure. Remember, a similar disclosure is there in clause number 9 of Caro 2020. In a similar disclosure for auditor, it is there. There is a similar disclosure for this in clause number 2 of Caro 2020. Okay. Now here, willful defaulter. What is this? Company board of directors have to check whether their company is declared as a willful defaulter. Check out. If the company is declared as a willful defaulter by any bank or FI or any lender, the board of directors has to clearly disclose in the financial statements, guys. They need to disclose date of default, date on which they were declared as a willful defaulter, details of the default, what exactly we defaulted, like how much amount we defaulted, what is the nature of loan that we defaulted. We need to give these disclosures. Remember, who is a willful defaulter? A willful defaulter is a person categorized as such by a bank or FI under RBI guidelines. As per RBI guidelines, a borrower may be classified as a willful defaulter by a bank based on RBI guidelines. If I am doing audit of our company, one company I am doing audit, and that company was declared as a willful defaulter by a bank. That company, what they need to do? Two things they need to mention. In the financial statement, notes to accounts, as additional regulatory information they need to disclose. What they need to disclose? 1, the date on which they were declared as a willful defaulter. 2, details of what exactly they defaulted, what amount they defaulted, what is the nature of the amount they defaulted. For example, amount 1 crore it defaulted, nature of amount, working capital limit with ICICI Bank, it is defaulted. Remember, a similar requirement is there in Caro clause number 9, inside that subclause 1. Caro clause number 9, subclause 1. Subclause 2. Subclause 1 is regarding details of default, lender wise we need to give. In that subclause 2 is there, right? 9 subclause 2, clause number 9, subclause 2 is the company declared as a willful defaulter by any bank. Their audit reporting requirement, whereas this is additional regulatory information which board of directors has to give this data in the notes to accounts of the financial statements. That's it, guys. So another ARI is completed. Now, so with respect to borrowings secured by current assets, we should, board of directors have to comment, board of directors have to disclose whether statements filed by them with the banker is agreement with books of accounts. If not in agreement, they need to give a summary of reconciliation and disclose reasons for discrepancy. If the company is declared as a willful defaulter, date on which they were declared as a willful defaulter, and details of what exactly they defaulted. Who is a willful defaulter? A willful defaulter is a person which is classified by a bank or FI or any lender based on RBI guidelines. That's it. Then third, another information the company has to disclose is whether any charges or satisfaction are not registered with the companies within the statutory period. Disclosure reason. Remember, here unregistered charges, guys. What information you should give is unregistered charges. Unregistered charges created, unregistered charges which we already satisfied. Satisfaction of charge means what? We already repaid the loan. Yes or no? Charge means what? we borrowed a loan and then an asset has been given as a security, yes or no? So if any charge or satisfaction of charges not registered with ROC, that details we need to, unregistered charges, unregistered satisfaction of charges, we need to give disclosure. This is another additional regulatory. This might be tested as an MCQ, be careful. You know what we need to give is unregistered, we need not have to give registered, that's it. Then again, utilization of borrowed funds, this is exactly a repetition of what we have seen in the share capital. This is exactly a repetition of what we have seen in share capital. So I'm not repeating again, the same point is again here. You know, by the way, we are discussing here what additional regulatory information below borrowings. For example, we might borrow money. You know how a company will get the money, either in the form of share capital or in the form of borrowing. So our company got the money in the form of share capital or a borrowing, means loan. What our company is doing, we are transferring to intermediary, where intermediary might be transferring to beneficiary. Same way, the intermediary has got money as a share capital investment or got the money as a loan. So that is why under borrowings, once again that funding party intermediary point is covered exactly. Next additional regulatory information. I hope you are able to understand ARI. ARI is very important. In every attempt 5 marks question is there on ARI. Another 20 to 30 minutes we are going to finish ARI. Next, look at inventory. Next ARI point we are going to look at. I think PPE has ARI. Yes. Under PPE, we need to give some additional disclosures. Under PPE, we need to give again some additional disclosure. What we need to disclose? Title deeds. What we need to disclose? Title deeds of immovable property not held in the name of the company. If you remember, guys, this disclosure is there in clause number 1 of CARO 2020, subclause 3, guys. In CARO 2020, subclause 3 is there, right? That is talking about title deeds of immovable properties not held in the name of the company. If company immovable property were not in the name of the company, the auditor has to give details. What details? What is the property? Description. Gross carrying value. Guys, here it is gross, not net carrying value. Guys, it's gross carrying value. And in whose name the title deeds were held. Whether he is a promoter, director, relative, or relative of the promoter, director, or is he an employee? Who is he? Property held from which date on their name? Why it is not held in the name of the company? So all these details you must give. Now look at, if the company the company shall provide details of immovable property, you know, it may be other than properties where the company is the lessee and the lease agreements are duly executed, means leased properties you can leave it. Company owned properties, freehold properties, company has to give a disclosure. What disclosure? If title deeds, means company registration document, I mean the registration documents of those immovable properties, no, they were not in the name of the company, they were in the name of somebody, they were not in the name of the company, then you should give details of what is the description of the property. For example, land and building. What is the relevant line item in the balance sheet? It may be property, plant and equipment. Okay, land and building. Gross carrying value 5 crore, some 5 crore. 5 crore. Title deeds held in the name of Mr. Ram. Who is Mr. Ram? He is a director of the company. Property held from date of purchase. Give the date of purchase. Okay. Now also indicate why it was not held in the name of the company. No, it was held in the name of the director because it was the company's interest, or it was astrological reasons. Yes, guys, it's an astrological reasons also possible. Or maybe recently company amalgamated, and amalgamating company property has to be transferred to amalgamated company. Still right now the process is going on. For that reason, the property deeds of the immovable property belonging to amalgamated company, which is right now in the name of amalgamating company, because the registration is yet to be done, so reason has to be given. So description of property, gross carrying value, you know, title deeds in whose in whose name they were held, who is he, relative, director, promoter, who is he, employer, and why it was, I mean from which date it was held in their name, why it was not held in the name of the company, reason. That's it. Next, another ARI. Another regulatory information related to fixed assets, another regulatory information related to property, plant and equipment. Okay, with respect to ARI, whether the company has revalued its PPE, the company shall disclose whether the revaluation is based on registered value. A similar point is there in CARO, clause number 1, CARO 2020, inside the subclause 4. If whether the revaluation is done by registered valuer, If there is a change, we need to specify the amount of change. If the change is 10% or more in aggregate, in net carrying value of each class. Remember, for revaluation, it is net carrying value we should see as an auditor while reporting in Caro. But here, we don't have to touch that point. Here, we just have to talk about who did the revaluation. Is it by a registered valuer or not? By the way, this is ARI, additional regulatory information. This is something which a director of a company has to disclose additionally in the Companies Act. Look at whether the company has revalued its PPE, and the company shall disclose whether the revaluation is based on valuation by a registered valuer. This we need to disclose. So if the company has done revaluation of PPE, we just have to disclose. Directors have to disclose who did the revaluation, registered valuer or not. That alone they need to disclose. So this is ARI. Then for capital work in progress, the company has to disclose aging analysis for capital work in progress, where the project is in progress. Capital work in progress, the project is in progress means, in fact, the deadline for the project. Suppose we are constructing one big factory, the deadline is still there. We have not yet crossed the deadline. Estimated completion date we didn't cross. Following aging schedule we should give. So how much amount of work in progress that is there for less than 1 year, 1 to 2 years, 2 to 3 years, more than 3 years, like project in progress, how much, projects temporarily suspended, how much within that. So you need to show amount. Further, so there will be some projects where the completion is already overdue. Overdue means what? The completion date already be crossed. Estimated completion date we already crossed. Now for that we need to give closing work in progress backup. We need to, by when, still how long it will take to be completed, in how many more years? Sir, we will complete in less than 1 year from balance sheet date, sir. Or we will complete in 1 to 2 years from balance sheet date, sir. We'll be completing within 2 to 3 years from balance sheet date, sir. Or we'll be completing more than 3 years from balance sheet date, sir. Project 1, this is already overdue. Project 2, this is already overdue. That also we need to. Further, where the project activity has been suspended, that details shall be given separately. Remember, this is overdue project. For overdue project, this time period is to be calculated from balance sheet date. Okay, now look at, so overdue has exceeded its cost from compared to original plan. The following capital work in progress aging analysis must be given. Whereas here, amount in capital work in progress, this is from the starting date of the project. If you have spent already an amount, and the amount is in work in progress, capital work in progress, and project is not yet overdue, then as on 31st March in the balance sheet you need to give a disclosure requirement. How much of this amount is there in the work in progress? Less than 1 year, 1 to 2 years, 2 to 3 years, more than 3 years. This is real aging analysis. Whereas this is, here you are giving aging of till how many more years it takes. That's the basic difference between that and this. In the original aging, you should give breakup between project in progress, how much, project temporarily suspended. Here also, projects that are in progress and crossed already completion date, and you should give separate details about project suspended but already crossed completion date and then they got suspended. That details you should give disclosure. Clear, guys, or not? Next, so this is one more additional regulatory information. I don't know how many of you remember this additional regulatory information. Somebody is asking, some Pramod is asking, sir, should I write Caro subclause number also? Preferably, see, main clause number 3, 4 like this you should write. If possible, subclause number also you write. Okay, getting it? Next, that's it, guys. I hope you're clear until now. Next, again, for intangibles also, additional regulatory information we need to show. For intangibles, no, one word will change. Intangible assets under development word will come instead of capital work in progress. So amount in, sorry, here CWP came, it's nothing but intangibles under development. IUD, you can call it as a shortcut, IUD under development. So for a project which is in progress, for a project which is temporarily suspended, we should give breakup. Again, there will be some intangible assets which are under development whose completion is overdue or has exceeded its cost compared to original plan, where project completion already crossed or estimated cost has already crossed by actual cost that we spent. Then we should give details, intangibles under development, which will be completed in how many years it will be completed, less than 1 year, 1 to 2 years, 2 to 3 years, all that. Again, we should give details of project where it was temporarily suspended. Remember, every asset construction, suppose company is constructing a building, that's one project. Company is constructing one factory, that's one project. Company is constructing one canal, that's a project. So everything will be viewed as a project. Are you clear? That's it. A similar requirement for capital work in progress is there. This is an aging analysis, guys. These are all Schedule 3 disclosure requirements. Basically, until now what we are discussing, additional regulatory information, is basically Schedule 3 discussion. This is something you must have finished in advanced accounting itself. But then I know you will not be touching there, so that's the reason I'm touching here. I'm explaining here. Clear, guys? Next additional regulatory information. Only ARI I am discussing first, then I will come back to remaining items later. So loans and advances, yes, again under loans and advances given by the company. Now this is again an asset item, PPE intangible asset item. Their additional regulatory information we saw. Now a company has given loan to somebody, company has given advance to somebody, loans and advances given by the company to somebody. This is here also some additional regulatory information has to be given, what they need to give. And by the way, just like the video if at all you didn't like the video. So see, you know how much tough it is, yes or no? How tough it is? Continuously, that to a revision class is something very intense, guys. Revision class is very intense, basically. Fine. And somebody is asking, sir, will you give dinner break? Obviously, man, within that we will finish this chapter. Don't worry. Now look at to be disclosed as additional regulatory information under loans and advances, guys. So in Schedule 3, loans and advances, notes to accounts, we give breakup, right? There the company has to disclose this following information. What information? They need to disclose following disclosure shall be made, where loans or advances in the nature of loans. Actually it's a loan only, but you named it as advance. So loan or advance in the nature of loan are granted to promoters, directors, key managerial persons and related parties. Did the company granted any loans or advances in the nature of loans to promoters, director, key managerial persons and related parties, either separately or jointly, that are repayable on demand or without specifying any terms of repayment? So if the company that we are doing audit, if they gave a loan or advance in the nature of loan to a director, promoter or related party along, either separated to them a loan is given or a joint loan to them along with some other party, we gave a loan which is either repayable on demand, which is given, where a loan is given without specifying terms of repayment. If that is the case, we need to give the following. The company has to give the following disclosure. Yes, somebody saying drink water. Yes, I'll drink water. I'm just remembering right now. Yeah, thank you. So the company has to give the following information. Who is the borrower? Is he a promoter, director, KMP, related party? How much amount of loan or nature of loan is given which is outstanding? How much amount is outstanding? What is the amount outstanding? And what is its percentage to the total loan? What is this percentage outstanding to total outstanding on balance sheet date? What is the percentage? Here, amount of outstanding as on 31st March, how much outstanding loan? And what is its percentage? What is this percentage of outstanding on balance sheet date to the total loans outstanding on balance sheet date? That details we need to give. By the way, remember, once again I'm reminding you, what I'm discussing is not Caro. A similar point is there in Caro also. Yes or no? That's it. Next, somebody is asking, sir, is it beneficial to do a study on my own or watching here? See, what I can tell you is, you watch this and get clarity, immediately go and study. The same point, immediately go and study. It will register in your mind because the coming exam is very near. Just one day, you will do really well. That's it. That's it, guys. I hope you're clear until now. Next. Then we have again audit of provisions and contingencies. Below that, ARI. I hope you are able to understand ARI. ARI below contingencies and provisions. Remember, under which head, under which line item of the balance sheet it is coming is not relevant, guys. This ARI point, if you are able to understand, that's enough. Because in exam they can ask you only Benami property related ARI. Or in exam they can ask you, just now we finished loans repayable on demand, whether the company has given any loans to promoter, director, related party, or either severally or along jointly with somebody else, yes or no. Then which are repayable on demand, which are given without specifying terms of repayment. Then each person wise, how much amount is outstanding, what is its percentage to the total loans as on balance sheet, at this detail. The same way, now Benami transactions, what is it? Directors have to give. The company directors have to give whether any proceedings under Benami law has been initiated. Benami Transaction Prohibition Act 1988. Okay, so if proceedings are initiated under Benami transactions, disclose details of property including the year. So which property, when you acquired, what is the amount involved in the property, amount of the property, who are actual beneficiaries of the property. Maybe your company may be held as a Benami, your company is holding the building in the company name, but actual company is not the real owner. The beneficiary is somebody else. If the property is in books of accounts, reference to the balance sheet, which item it is there. If not, state the reasons. Some assets were held in the name of the company, but they were not reflected in books. Why it was not reflected in books? We should give reasons. And what are the proceedings against the company? Is the proceedings against the company under Benami law as a beneficiary, or is the proceedings against the company as a transferor of a Benami property? So in a Benami property, no, there will be transferor, there will be beneficiary, there will be intermediary. Yes or no? Now this intermediary is Benami, acting as Benami of beneficiary. Somebody else is transferring property to a beneficiary, but they are using some Benamis in between. If the company is acting as a Benami, that details we need to give. Who should give these details? Directors have to give. What details they need to give? What is the details of Benami property? What is the amount of the property? Who are the beneficiaries? If the property in the books, give reference to the item in the balance sheet. If the property not in the books, but company name only, property held. Why it was not held in the books? And details of proceedings. What proceedings were there against the company? Is the proceedings initiated as a beneficiary? Is the proceedings initiated as a transferor? And nature of proceeding. What is the nature of proceeding exactly? And what is their status? And what is the company view on that? What exactly the proceeding? Status of the proceeding? What company's view on that particular proceeding? So this particular information we need to give as an additional regulatory information. I hope you're clear, guys. The reason why I started items of financial statements with additional regulatory information, because this is something where many students don't focus. We are about to finish, guys. We are about to finish regulatory information point. Now, next, we need to, the auditor has to, the management has to show one more disclosure. What disclosure? Any transactions. Suppose, the company entered into some transactions. With what companies? With companies where the name is struck off. Where their name is struck off under 248 section of the Companies Act. There is a company where their name has been struck off. Remember, removal of name of the company from register of members, register of companies, removal of name of the members, that's called struck off. Okay, why a company will struck off? There is a difference between passing a liquidation order and removal struck off order. Both are different, guys. Be clear. Now here, company directors have to give disclosure about whether this company entered into any transaction with a company whose name is struck off by ROC under section 248 of Companies Act. If so, what transaction entered? What is the name of the struck off company? What is the transaction that we entered? Sir, we purchased goods, sir, or we invested in that company, sir. Yes or no? Or any outstanding balance is there with them, sir. Balance outstanding mention. If there is any relationship with the stock of company, no, sir, that stock of company is my subsidiary company, sir, my associate company, sir, then give that relation. 4 points you need to disclose, guys. 4 points you need to give. Name of the stock of company, nature of the transaction, balance outstanding, relationship with them. Very simple. The company that you are auditing, right? That company has entered into some transaction with struck off companies. That company has entered into some transaction with struck off companies. Then 4 points you need to give. 1, name of that company, struck off company, what transactions you entered into, what is the relationship with them that you are having, and how much is the amount outstanding as on balance sheet date. Because if the company has been struck off, that is in a severe litigation, guys. That's in a severe litigation. That may even go for liquidation also. So how much balance is there? People has to know how much balance is lying. Our balance is lying with a struck off company. That's it, guys. Clear? Then important ratios, guys. Important ratios we need to disclose. Remember, right now, in the last 40 minutes, whatever additional regulatory information that I discussed, trust me, every one of this is tested in the past exams. Every one of this is tested in past exam. You have passed 15 attempts. It was tested in the old scheme before 2024 May, November 2023, before November 23 attempt and before attempts. All these points were tested. Even now in the recent exams, they got tested. Okay. Now, key ratios we need to disclose. What are the key ratios? The following ratios must be disclosed. What are the key ratios? Current ratio, debt equity ratio, debt service coverage ratio, return on equity, inventory turnover, trade receivable turnover, trade payable turnover, net profit ratio, return on capital employed, return on investment, and net capital turnover ratio. All these ratios company has to disclose. Not only ratios, you should also disclose. Most important, it was recently asked as an MCQ. Yes or no? They can even ask as an MCQ any of this. Explain ratio. First explain the ratio, numerator and denominator. Also explain, most important, provide explanation if there is a change in the ratio exceeding 25% compared to previous year. Sir, last year my asset turnover ratio, my inventory turnover ratio 2, sir. This year my inventory turnover ratio is 3, sir. Now what is the change? 1 divided by 2, 3 minus 2 is equal to 1 divided by 2 is equal to 50% change, guys. 50%. I should give explanation why there is a change more than 25% in a ratio. So exceeding 25% if there is a change, you should give a disclosure. That's it, guys. This is the disclosure requirement related to ratios. Key ratios: current ratio, return on equity, return on capital employed, return on investment, inventory turnover ratio, trade receivable turnover ratio, debt service coverage ratio, debt equity ratio. See, 8 ratios I already told. And net profit ratio, net capital turnover ratio. Over. Trade payable turnover ratio. That's it. Trade receivable turnover ratio, trade payable turnover ratio, inventory ratio. That's it. And we should give explanation of numerator, denominator. Many students will forget this numerator, denominator explanation point, and some students will forget explanation about change in the ratio exceeding 25% compared to the last year. That's it, guys. I hope you're clear. That's it. Appa, we are about to finish this, guys. We are about to finish this ARI point. Then it's actually very tough, handling this. Yeah. Again, additional regulatory information. Now, remember in CARO, you have a clause number 8, 2020 in CARO, whether any undisclosed income discovered during the year in a tax assessment. If so, the auditor has to check whether the same is accounted in that year or not. Here you see, the company shall give, here ARI is company's requirement. Yes or no? The company has to give a disclosure. Yes or no? The company shall give details of transactions not recorded in books but disclosed as income during tax assessment under income tax law. The company has to disclose, are there any transactions not recorded in books of accounts, but in the current year we disclosed it to the income tax authorities and we paid tax also. Some undisclosed income is that which we didn't record in books earlier. Now we admitted with the department that yes sir, we have that income and paid tax also. If so, state, the directors have to mention whether previously unrecorded income and unrecorded assets are now recorded in the books of accounts. So earlier some income, some assets, no, we didn't record. In this year we admitted with the department, sir, yes sir, it was a mistake, we admit that, and we paid tax also. Undisclosed money tax 60%, 25% surcharge, 78% due pay taxes they paid also. Now that unrecorded item, now did they record it? That point you should check. Company directors also should give that disclosure. Very good, guys. Almost continuously in the past 45 minutes, continuously 400 students plus were on live continuously. Very good for your dedication. Tomorrow in the exam you are going to rock. That's it. Okay, so this is additional regulatory information. Until now, just reply me, guys. Are you all with me? Until now, just comment regarding black money. Just comment black money, means I assume that you completed up to this black money provision. Okay, just comment yes sir, black money provision completed. This is regarding black money provision. If any black money was admitted by the company during the year and paid tax on it, the company has to disclose whether that undisclosed money, asset or revenue, has been disclosed in the current year or not. Yes, guys. And one more request, if at all any of you did not like the video, just like the video. Okay, and I hope you're all learning the points now. Very good. You're all getting clarity, more clarity. Just tell me whether you're all connected with that. Until now you understood decently, right? You can just reply me understood. That's it. Very good, guys. Then about to finish, guys. ARA is about to finish. Then we'll start P&L items. Okay, then we'll start P&L items audit. Then CSR provision is there in ARA. Yeah, amma. Crypto and CSR. Once we complete these two, additional regulatory information is clear, guys. Additional regulatory information is clear. I mean, it will be done. Now, again, additional regulatory information. CSR. What we need to disclose relating to CSR. corporate social responsibility expenditure, what we need to disclose. Companies which are covered under section 135, nothing but those who are liable for establishing CSR committee, okay, they must disclose the following points. What they need to disclose? Remember, CSR point is there in clause number 20 of CARO 2020. Am I right? CSR, there it's an auditor reporting requirement on ongoing project, other than ongoing project, whether that funds were transferred to respective accounts or not, we need to disclose. We need to comment there in the audit report in CARO. Whereas here, it's a company's requirement. It's a company's disclosure requirement in the schedule 3 notes to this, notes to account. Yeah, ARI is very, very easy compared to other items in the chapter. ARI is very easy. Fine. Next. So look at companies covered under 135. The board of directors has to disclose. What they need to disclose? How much amount they have to spend. For example, no, Reliance is having 50,000 crore profit year into 2%, 1,000 crore they need to spend. First, yes sir, our company has to spend 1,000 crore, sir. Our company has to spend 1,000 crore. Amount you spent, sir, we spent till now 800 crore, sir. What is the shortfall? 200 crore shortfall, sir. Last year also there is a shortfall. No? Yes sir, last year also 150 crore shortfall is the total shortfall is 350. Total of previous year shortfall. Why? There is a reason. Sir, a project is going on, sir. We are going to spend it in the coming few months, sir. Nature of CSR. Sir, we have taken rural development activity and we have taken education to poor. Like this, we have taken a project, sir. And related party transactions, contribution to trust control. Sir, out of this 800,000 crore, sir, we have transferred 500 crore to our Reliance Foundation, sir. Reliance Foundation is a sectioned company incorporated by Reliance Industries Limited. Then, where a provision is made for liability under contractual obligation, disclose movement in the provision. So, during the year, we created a provision for CSR expenditure, rural development in our books of accounts, and this is the movement of the provision. We need to give this disclosure. With respect to CSR, first to talk, how much amount you have to spend under CSR? 1,000 crore. How much you spend? 800 crore. How much is shortfall? 200 crore. Previous year also there is a shortfall, right? That shortfall also you should mention. And what is the nature of activity? Education, relief, medical relief, or rural development, what exactly? Then details of related party. Out of the spending in the CSR, how much of this amount is given to beneficiaries who are related parties to you? Okay. Then where a provision is made in the books of accounts, movement of the provision. That's it. With respect to CSR, ARI is ARI is completed. Clear, guys? ARI is completed with respect to CSR. That's it, guys. Then last ARI, cryptocurrency and virtual currency related disclosure. Crypto and virtual currency related disclosure. What? If a company has traded or if the company has invested in cryptocurrency, virtual currency like Bitcoin, Dogecoin, you know, right, cryptocurrency. If the company has traded or invested, doesn't matter whether you traded or invested or doesn't matter. Have you touched? Did the company bought cryptocurrency, virtual currency? If so, disclose. What is the profit made on the crypto transaction or what is the loss made on the crypto transaction? What is the profit? What is the profit on transaction involving cryptocurrency, virtual currency? And how much profit? Means some transaction you might have bought and sold it. Is there profit? Is there loss? First disclose the profit or loss. 2. On balance sheet date, the company still holding some crypto, right? Give the details. Amount held on reporting date. Reporting date means balance sheet date. And how much amount of deposit or advance received from trading or investment purpose? How much deposits or advances received for trading or investments purpose? So deposits and advances we received for crypto related advances. That's it, guys. So whether profit or loss on transaction, amount held as on reporting date, deposit or advance received for trading or investment purpose, either for trading in crypto or for investing in the crypto, how much deposit company received, how much loan company received for that purpose. So that purpose also we have to give. These are all additional regulatory information, guys. These are all schedule 3 disclosures. You will understand only when you read full schedule 3. You will understand this ARI information relevance. Okay, this ARI right now whatever I discussed is an amendment act in Companies Act 2021 Amendment Act, where schedule 3 is massively amended in 2021, and that same time is only CARO 2020 was also implemented. So that time only ARI and all came into picture. That's it, guys. That's it, guys. With this, ARI is completed, guys. ARI. So additional regulatory information is completed. Now let's move to the P&L items audit. Once we complete P&L items audit, remember in items of financial statements, the weightage is like ARI, 4 marks question will come. P&L items, a 4 marks question will come. Balance sheet item, 4 to 8 marks question can come. This is how generally questions can come in generally items of financials based on the past 10 years analysis I'm doing here. Getting it? So that's it. I hope you're confident until now. Thanks a lot, everybody's appreciating, really thanks a lot, because I wanted to make this session very counted. In your coming exam, you need to really perform well if a question comes from this particular chapter. So that's the reason. Okay, that's it. Just 2 minutes. It's so draining. It's actually because no morning I already take it. My morning I took a class already 7:30 to 1:30 for CA final, one audit session. But again now I'm taking a revision in life. This is very challenging basically. Just 2 minutes, guys. Yes, guys. Okay, we'll continue. P and L items audit, guys. P and L items audit. Within the P and L items, first I will discuss about other expenses. First I will discuss about other expenses audit in P and L. Okay. Now, generally tell me what are all other expenses include in a company. Very simple: power and fuel, rent, repairs, insurance, traveling, legal and professional expense, and miscellaneous. Sometimes a 4 marks question will come only on what are other expenses includes. Very rare. They won't test this easy question, but there is a chance that they can test this kind of questions. Okay. Now, yeah, I'm taking care of my health 100%. I maintain. Actually, once this session is over, I'll go for a gym actually. Okay, I'll do a minimum gym at least every day. Fine. So I really take care of my health, guys, because I work almost in a day 13, 14, 15 hours in a day. I work 6 months in a year. Another 6 months I work only 6 to 7 hours. I can say 5-6 hours only I work in a day for 6 months. For 6 months I work 14 to 15 hours. So right now I am in that 6 month slot where I generally work for 14 to 15 months. I started in October till May mid. My work is like this only, but it's okay. I'm habituated. So if you also have done like this, if you studied like this, I'm telling you all deserve all India ranks. Everybody can get all India rank, guys. The only thing is it's just attention and time that you're giving. Everyone is capable. The only thing required is your attention is required. If at all any of you have failed earlier, you failed only because you didn't give enough time to this. That's the only reason. Not that you're not smart. You're very good. You're very intellectual. You remember every movie. You remember cricket match. You remember everything that is happening around you, but you're not able to remember the books. Means you're not giving attention that it requires. That's it. Okay, fine. Anyhow, motivation next. First the content is most important. That's it. That's it. Now look at audit of other expenses. What we need to check, what other expenses includes, we saw. What auditor has to focus. This itself can be given as a 4 marks, guys. Many a times 4 or 5 marks question. When you are auditing other expenses, auditor has to analyze monthly trend for some expenses and vouchers for other expenses to verify the following attributes. The auditor analyzes monthly trend for some expenses, whereas for some other expenses I will verify the voucher. For some expenses we verify vouchers. For some expenses we verify monthly trend. So in a question can be given like this: monthly trend for some expenses, vouchers, other expenses, like this. A question will come. What auditor has to do? What auditor has to verify? You know, first to know, verify whether expense is pertaining to current period under audit. First point you should check is the other expenditure which the company is accounting, no, is it related to current period? First of all, is it belonging to current accounting period? Check out. See when the benefit of that expenditure is received. If the benefit is received in the current year, it's a current year expenditure. Second, whether is that expenditure qualified as revenue, because no, other expenditure means what? Other expenditure means P&L item. So if you're debiting in P&L, you should check whether is it really a revenue expenditure but not a capital expenditure. Third point, check supporting documents. Check supporting documents, guys. And an expense is classified under correct expenses. See that this expenditure is classified under correct expense head. Sir, what is expense head, sir? Power and fuel is one expense head, rent is another expense head, repairs is another expense head, insurance, traveling, legal and professional fee, these are all expense head, guys. Whether this is classified as expense head or not, you need to check. whether it is classified. And not only that, see that expenditure is authorized as per delegation of authority, authorized, and see that expenditure must be related to business and not for personal. If you observe, guys, most of these conditions, most of these points which they mentioned, 6 points they mentioned, right, these are mentioned under section 37 of income tax law also. See, under section 37, deductions you get only when it is related to business, only when it is a revenue but not capital, and only when it is belonging to the relevant previous year. So long, 3 conditions are common in 37. Same here also, I'm just telling you. So generally some expenses follow some monthly trend, like rent, power, fuel. For that, no, we observe monthly trend. And not only that, for remaining expenses we verify the actual expenditure. What we verify in the actual expenditure? We verify, is it belonging to current period? We verify it's a revenue and not a capital. We verify it's related to business. We verify whether that expenditure is authorized as per authorization matrix or not. A delegation of authority. Is the expenditure authorized as per delegation of authority in the company? Because no, in some companies, no, if the expenditure is more than 5 lakh, finance manager has to authorize. If the expenditure is more than 10 lakh, CEO have to approve it. Like the delegation authority matrix will be there. So as per that, it has to be authorized. And see that expense is classified under correct accounting head, correct expense head. See that proper documents are there. What is the proof that the expenditure is genuine? Look at the supporting documents like bills, tickets, insurance policy, all that. So this itself can be asked as a straight question, guys. Next, how to audit rent. Sometimes they'll ask you how to audit rent, how to audit power and fuel. These two they will ask. Sometimes they will ask you how to audit legal and professional, how to audit travel, repairs, and printing and expenses. Either these two combination they'll ask, or these two combination they'll ask. You know, this will be asked for 2 marks, this will be asked for 2 marks, total question is for 4 marks. Like this also they can ask, guys. Please be careful. Now look at rent. How do you verify rent, ma? How do you verify the rent? Very simple, sir. I will see month-wise rent schedule, and I will compare that with rent agreement. Tell me, a company are doing audit, they have one building, corporate office is there, that was taken on a rent. I will first take from the company month rent ledger account, rent schedule account I'll take, and I'll see whether rent is accounted for all 12 months or not, and see whether the rent amount they accounted, is it matching with the rental agreement or not. Simple. Look at, obtain month-wise expense schedule and rent agreements. Verify whether expense is recorded for all the 12 months and it is matching with agreement. See that rent is recorded for all 12 months and it should be matching with rental agreement. And I will see how much amount they need to pay as per rental agreement and how much they paid. Suppose no, rental agreement is last year drafted. Now this year they are paying rent same amount of rent. Why there is no increment? Generally, commercial buildings, whenever we are paying rent in second and third year, there will be some escalation, there will be some increment. Consider escalation clause for straight line recording, and verify agreement is in the name of the company and pertains to premises used for business operation. You know, it must be ensured that rental agreement contains property address and that property must be used for business purpose. Then only it's a business expenditure. Am I right or not? So see, get a month-wise schedule and rent agreement. See that it is accounted for 12 months and see that the escalation clause is correctly mentioned. See that escalation clause is correctly considered and see that rental agreement is in the name of the company. And fifth point, see that premises is used for business purpose. That's it. Then another point, how to audit power and fuel. How to audit power and fuel. Very simple. Get again month-wise schedule and power bills. You see here, everywhere legal and professional fee, month wise and consultant wise summary, yes or no, everywhere month wise is common point here. In all these 3 cases, obtain month wise summary. In case of rent agreement. In case of fuel expenses, get power bill. In case of legal and professional, consultant wise summary. Mr. X, one lawyer, Mr. Y, auditor, Mr. Z, internal auditor. Consultant wise summary you should get, month wise you should get. Now check. Ensure expenses are recorded, power and fuel expenses are recorded for 12 months, and check, you know, you have to compile how many units we consumed, what is the rate applicable for the electricity per unit, and verify accuracy in which power bill is calculated. Generally these points we do in olden days, now we don't do, but in exam you should write like this only. In exam we should write like this only, getting it? And we should analyze monthly trends by linking power units consumed to finished goods produced. You know, tell me, for example, no, we are doing audit of 25 to 26 financial year, Q1, Q2, Q3, Q4. Q1, April month, how much finished goods we produced, how much current bill, how much power bill is. In May, how many goods we produced, how much is the power bill. If in any particular month, goods produced were low, but power bill was very high, you need to inquire into it. So for that reason, we need to analyze monthly trend by linking how many units consumed to how many goods produced, and investigate variations. If there is an unusual variation, we should investigate, guys. That's it. So this is regarding power and fuel. So first point, get month-wise schedule of power and fuel, and get power bills, fuel bills. 2, see whether it is accounted 12 months or not. 3, compile how many units we consumed, what is the rate per unit applicable, compute how much is the total power bill, compare with the bill to know whether it is accurately accounted or not. Next, analyze monthly trend by linking. See monthly trend, how much power units are consumed. See monthly trend of finished good produced. If there is a variation, investigate why there is a variation. That's it, guys. Okay. Next, legal and professional, get month wise schedule. April month, how much legal expenses we incurred, May how much we incurred, June how much we incurred, July how much we incurred, up to March, month wise breakup you get. Then you also get consultant wise. Sir, our company during the year consulted 5 lawyers, 2 chartered accountants, 7 persons were there. 7 persons, give me ledger based on these 7 people. Now for retainership agreements, verify 12 months. Sometimes no company will have an internal lawyer where 12 months these people will be working for us, entire 12 months. They are like an employee. Retainer fee, we call them as retainers, full-time retainers for the company. So for retainership agreements, verify 12 months of expenses. Next, for non-recurring expenses, vouch selected samples. What is non-recurring legal fee? Sir, we are paying a fee to a lawyer in Supreme Court, sir, just only 1 day session, sir. He is not our regular lawyer, sir, but for some special occasion we call. That's a non-recurring expenditure paid to a non-recurring lawyer. Okay, and see that all the attributes, vouch selected attributes. What attributes we need to select? We need to verify what attributes. We need to verify that it must belong to current period, it is a revenue, its supporting document is there, it should be accounted in correct expense head, it should be authorized, it should be for business purpose. These are all attributes that we need to test. We need to vouch various expenses to verify the following attributes. These are the attributes we test, guys. Clear? Next, be careful, because when you are checking legal expenses, you might get information about disputes, guys. You might get information about contingent liabilities, pending cases, litigations, where the company has to create provisions, and all these matters must be disclosed to auditors. You need to check. See, when you are checking legal expenses account, ledger of legal expenses, professional expenses, first see month wise and then consultant wise. Verify 12 months of expenses correctly counted. For non-recurring legal expenses, verify the attributes that I discussed here above. What are the attributes? Is it belonging to current period? Is it authorized or not? Is it in the name of the business or not? Is it revenue expenditure or not? Supporting bills and all. That's it. Now be careful when you are checking legal expenses. It might indicate a dispute that the company is involved in. So see that provisions are made and the matter is disclosed to the auditor. That's it, guys. Easy or not? Yeah. Yes. Only ARI. 5 marks question is highly probable. Somebody is asking only ARI. Is the question probable? Yes, there is a high probability from ARI. An MCQ or a descriptive question might come. Next. But having said this, sometimes extremely rare scenarios, sometimes they may not test also, but I tried my level best, assuming that they are going to test. I tried my level best. Look at next, travel, repairs and printing and stationery. This is also one of the other expenditure, right? So select a sample of travel expenses, vouch for attribute discussed about. Select some sample of travel. Suppose some directors have traveled in June month and August month they travel. Take those expenses, verify attributes. What are the attributes? I told you these are the attributes that we need to check. Verify various attributes. Yes or no? Prepare a monthly summary of analytical trend comparison. Prepare a monthly summary for analytical trend. So April month, how much travel expenditure? May, how much travel? June, how much travel? July, how much travel? In a particular month, why there is so much of travel expenditure? Investigate. Perform analytical procedure to check reasonableness. Last year, how much travel expenditure we spent? This year, how much travel expenditure we spent? Why there is a difference? Analytical procedure. So there are two analytical points. One, monthly summary you prepare and see the trend. Perform analytical procedure as to reasonableness. For example, how much is the travel expenditure per unit of production? Last year, how many units we produced and how much travel expenditure incurred? This year, how many units we produced, how much travel expenditure is incurred? Or last year travel expenditure as a percentage of turnover, this year travel expenditure as a percentage of turnover. You can analyze why there is a difference. You need to investigate. That's it, guys. That's it. And disclosure requirement. How other expenses we need to disclose? Rent how much, insurance how much, power and fuel, repairs and maintenance, legal and professional, printing and stationery, traveling. This one very rare. This disclosure requirements can be tested as a 4 marks question. That's it guys. Other expenses is over. In P&L, other expenses is over. Now the next item of the financial statement, is depreciation. Next item of the financial statement is depreciation. Just a minute guys. I hope everyone, I think more than all, continuously 400 students are hooking. Very glad. I hope the session you are enjoying, you are learning something. We completed almost, how much time we completed till now? Oh, just 48 minutes. No, 1 hour 10 minutes. Sorry, 1 hour 10 minutes. But we did enough coverage guys. No problem. Another 1.5 hour also I'm ready to go. I'm ready to go in the same flow. Yeah. So next guys, we'll continue. Audit of depreciation and amortization. See guys, this chapter, once we finish this revision session, right, 1 hour to 1.5 hours, you just calmly read. 99% I'm telling you, tomorrow any question come from this chapter, you will do really well, because that's the reason I'm repeating all important topics. I'm repeating. Okay, now from here I will go important points alone. Okay, now depreciation. Key attributes we need to verify. What are the key attributes that we need to verify in depreciation? First we need to verify accounting policy. Then we need to verify whether the same accounting policy continued. Then we need to verify whether residual value considered or not. Then we need to verify, see that the depreciation calculation is accurate. Then we need to verify if there is a component in PPE, whether depreciation is correctly calculated on that component or not. So these are the attributes. Many a times, what are the key attributes? Auditors should consider the following key attributes while verifying depreciation and amortization. This was asked as a 5 marks question many times guys. Depreciation key attributes was tested as a tested many times. Next, look at accounting policy. First, what we need to check in accounting policy? Understand what is accounting policy for depreciation and amortization. Ensure that the accounting policy is complying with the Accounting Companies Act and applicable accounting standard. First, understand what accounting policy the company is following, and see that the policy is matching in line with Companies Act. See that the policy is matching with accounting standard. 2 points relating to accounting policy. I hope you're clear. Next, consistency. Verify that the policy, the accounting policy for depreciation, is consistently applied every year. Sometimes changes can happen. Okay, who said change is prohibited? Change can happen. If there is a change, see that change is adequately accounted and disclosed. So policy related 4 points now. 1, understand what policy the company is following for depreciation and amortization. See that it is in compliance with the Companies Act and accounting standard. See that it is consistent from previous year. If there is a change, 4th point, if there is a change, see that the change has been properly accounted and disclosed. Over 4 points. Next, confirm depreciation is calculated only after adjusting residual value from the asset cost. Yes or no? We should remove asset cost minus residual value by number of years. That's the rate of arrival of depreciation. Am I right or not? That's it. And next, see that depreciation and amortization charges are valid. They're accurate, they're recorded in appropriate period. See that depreciation and amortization charges are valid, accurate, recorded in the appropriate period. So amortization charges are valid, accurate, and recorded in appropriate period. Then verify that each significant component of PPE is depreciated separately. Sometimes, no, within a property, plant and equipment, some major component will be there. That component might have a separate useful life compared to the mission. Then that component has to be depreciated separately. See that significant component of a property, plant and equipment is depreciated separately. And see that amortization charges, all depreciation amortization charges are valid, accurate, and recorded in correct accounting period. All the assets have to be depreciated. All the depreciation and amortization charge has to be accounted. Remember, depreciation is for PPE, amortization is for intangibles. I hope you're clear. Further, ensure most appropriate depreciation method is used for each separate depreciable component. Correct, right? Furniture, we take 10 years. Furniture, straight line method. Building, straight line method. Plant and machinery, WDV. Again, within the plant and machinery, some spares will be there, some important component will be there, that might be depreciated as SLM method. Depending upon how the asset is being consumed by the entity, the method of depreciation accounting will vary. That's it, guys. Depreciation, key attributes to be verified is over. Now, what is the further we have to check whether depreciation is completely accounted. Further, we need to check depreciation is completely accounted. How we need to check? See that depreciation amortization are correctly recorded with no understatement, no overstatement. We have to ensure that depreciation is recorded on all assets. For that, what auditor has to focus on? See, generally opening assets we provide depreciation, but what about current year purchases? Current year some assets would have been sold. Obtain a list of additions and deletions with approvals from authorized personnel. In the year, any new asset purchased or any asset deleted, so get a list of additions and deletions with a proper approval mechanism. Then ensure intangibles are properly amortized. Verify that depreciation is only from the date when the asset is ready for use, not from actual usage. This is called passive usage. Suppose we bought a generator and kept, we didn't switch on the generator, still we calculate depreciation because it was installed. Installation date is important for depreciation. Am I right or not? So installation date is important. Next, 8:30, guys, it will go up to 8:30 or 8:45. I don't know, I'm not sure. By 9 also it will go. I'm continuing with the full flow because I want tomorrow from this particular chapter you should secure 12 to 16 marks. So next, check depreciation on revalued amounts is properly accounted, and then it is amortized, it is debited to revaluation reserve. Suppose if at all there is an increased revaluation and earlier already revaluation has already been happened, if any depreciation related to revalued portion, we should adjust it from revaluation reserve. And ensure depreciation and income tax act align with Companies Act for additions, and opening WDV matches with tax audit schedule. There is no compulsion, guys. Under Companies Act depreciation, under income tax act depreciation can be different, yes or no? And most of the companies it is different, because under Companies Act, company follow depreciation rates as given under Schedule 2, whereas Income Tax Act, they follow depreciation as per Appendix 1, Appendix 1A under income tax law. That's it, guys. Next, what are the disclosures relating to depreciation, accounting policy, useful life of the asset, residual value, and depreciation method? 4 disclosures we should give. So what we need to give? Accounting policy, useful life of the asset as per Schedule 2, residual value, and depreciation methods. That's it, guys. Main important point in depreciation I completed. Key attributes is very, very important. What are the points that you need to understand? Accounting policy, whether the policy is consistent, whether residual value considered, see the depreciation is calculated accurately, properly, validly, and see that each component of depreciation is computed separately, and see the depreciation method used is appropriate. That's it. And within the audit procedure, completeness is most important, guys. That's it. Clear until now? Next, HR, employee benefit expenses. In the employee benefit expenses, most important is what? Understanding entities hiring, appraisal, retirement process. This itself was asked as a 5 marks question many times, guys. So understand how the entity is hiring, how the entity is giving increments. Appraising means what? Evaluating employee performance and giving increment or decrement, either promoting him or demoting him. So anything can come as a part of appraisal, okay, and retirement. How a company will retire an employee. So when you're doing audit of employee benefit expenses, first you should understand, don't directly take salary expenses month wise and then start checking. What you will check? First understand how company hire people, how company give increments and decrements, promotions, all that, and how an employee retired from the company, how company settles them. First understand the process behind. Now here you have to test common internal controls over employee payment cycle. You need to test internal control system on employee payment cycle. What do you mean by internal control system for employee payment cycle? There must be attendance record, and you must keep an up-to-date employee master. Employee master means what? It's list of employees, employee master means whenever a new employee join, we have an employee master, means list of all the employees joined in this organization, date of joining, who is the employee, his Aadhaar number, his PAN number, his date of birth, his age, everything will be recorded. That's called employee master. So first, company has to maintain attendance record. Second, company has to always keep an up-to-date employee master. and there must be authorization and approval for payroll processing and disbursement. Remember, payroll means what? Every month company has to pay salary to the employee, right? That monthly process is called as payroll process. Next, accurate computation of payroll deductions. Now tell me, 1 month, no, employee has to pay, we have to pay for one employee 1 lakh salary, but actually 1 lakh salary we won't pay him. In that month, no, 12,000 provident fund deduction is there, 10,000 TDS deduction is there, so we will pay only 78,000 into his bank account. So maybe the employee corporate package is 1 lakh per month, but take home salary is 78,000 because deductions apply. ESI, provident fund, TDS, all deductions apply. And see whether company has created provision for gratuity, leave encashment, and bonus. These are the points that we need to test with respect to internal controls. See that company have certain common internal controls over payment cycle, controls over attendance record, controls over employee master, controls over authorization and approval of payroll process, control on payroll deduction, control on accounting of retirement benefits like leave encashment, gratuity, and bonuses. So on all these controls must be there. And auditor, as an auditor, what you should do? As an auditor, you should test these controls. You should test these controls to determine effectiveness. You should test these controls whether these controls are effective. Attendance record, company taking attendance regularly correctly or not. Yes or no? If controls are effective, you can reduce substantive testing. This is a general concept point which every one of you would have already aware of. That's it, guys. Next, further, you need to take some sample employees. Suppose Reliance has 5 lakh employees. Take some sample 100 employees. What you check? For 100 employees, I will check appointment letter, I will check promotion appraisal letters, I will check their attendance record, I will check a HR policy, I will also check whether his name is there in the employee master or not. So I will randomly select some employees, examine related documents. What is his appointment letter, appraisal, attendance, HR policy, employee master. So all these points I will check whether to that employee, as per appointment letter, whatever salary we promised, are we paying it or not. Suppose we are paying extra amount, then I will say appraisal letter, increment letter, promotion letter, I will cross verify. That's it, guys. Now, substantive, I will perform monthly analytical procedure. Analytical, monthly expense reasonability. April month, total employee cost of the company, how much? May month, total employee cost, how much? June month, total employee cost. I will see whether it is reasonable or not. And in each month, I will see sales comparison also. Look at, compare with previous year. Set an expectation of expense based on entities, operations, and industry trends. Sir, company, last year 1,000 employees were there throughout the year, average, and company turnover is 10 crore. Now the company has 2,000 employees. Why the company turnover is still 15 crore? Why the company turnover does not double? We need to ask for reason. This is what analytical procedure impact. Next, somebody is asking, I told at the beginning itself, 2 to 2.5 hours it will take for me to finish. Okay, that's it. Then next one, audit procedure, guys. Audit procedure. So recorded employee benefit expense was actually incurred. Actually, here completeness is most important. In employee benefit expenses, completeness is most important. First, get a list of employees at the period end, split by how many were newly hired, how many left the company, how many are continuing. So list of employees as on 31st March, get a list of total number of employees during the year, which includes newly joined, deleted, and those who are continuing. For new hires, for company, for those who newly recruited in that year, verify appointment letter, salary processing as per agreed terms with the appointment letter. For resigned employees, see that food and file and settlement like gratuity, leave encashment, everything is properly paid him. And check that all the provisions have been made accurately for continuing employees. Those who are continuing, right, for them gratuity provision, leave encashment provision, bonus related provision, everything has to be clearly made. That's it, guys. So this is regarding completeness audit. Then that is employee benefit expenses, guys. Then we have purchases. Wow, purchases. Now before purchases, first let me discuss, okay, purchases will continue. Purchases, how to do audit of purchases. In purchases, many students blindly directly go to audit procedure, occurrence, completeness, cutoff testing, analytical. In purchases, no doubt analytical is very important. Okay, I'll come back to this. But more than this, even more important is what? Introduction to purchases. Many times, first, this itself can be asked as a 5 marks question. Controls over purchases, a 5 marks question can come. Common controls over purchase cycle, a 5 marks question can come. Any of these three. And in that, Another one is special considerations in occurrence of purchases. A 5 marks question can come, or analytical procedures related to purchases, a 4 marks question. These are all the probable possible questions, guys. Yes. Somebody is asking, sir, will this video be there on the YouTube even after the live is over? Absolutely, guys, it will be there. Okay, next, analytical procedure. Look at now, look at first, introduction to purchases. First, you want to do audit of purchases, first understand the organization and where and all production is happening. Don't directly jump into audit of purchases. First understand the company. Like, what you need to understand, what type of products the company is producing, what types of companies the company is procuring, nothing but first, what are they procuring, what they are purchasing, domestica, overseas, are they buying locally, are they importing it, terms and conditions of the purchase. Look at the terms and conditions with suppliers. Who are the major suppliers for the company? For every company, suppliers will be very limited. Okay, and how much credit period company gets, and is the company performing quality checks or not, and what are the purchase terms, are they purchasing in cash or are they purchasing in credit? So auditor obtains knowledge about production centers and purchases. You need to get an understanding of what is the company production center, and you need to understand how the company purchases. Understanding purchases means what? Understanding what products and services the company is procuring, from where they are procuring locally, what are the terms, who are the vendors, quality, credit period, and are they purchasing in cash or credit? That's it, easy. Next, then auditor has to look at controls over purchase point. Controls over purchases, guys. Auditor identifies control points over purchases. Control points means what? Segregation of duty. Purchase order will be placed by purchase department, goods will be received by stores department, accounting will be done by accounts department, payment will be made by finance department. In a company, in a very big listed company, only one transaction, purchase, but that transaction is executed by multiple people. That's called segregation of duty, separation of duty. And so there will be segregation of duty, there will be quotes, competitive quotes, tendering process they follow, and there will be some purchase committee, nothing but purchase department will be there, and somebody has to authorize the purchase price and place an order. Then GRN will be there, and quality and quantity check will be there with GRN, and vendor invoice. Once GRN, see, we place purchase order, right? We place 1000 units at 100 rupees. Then goods received note, we need to prepare 1000 units. If the goods are received 1000, then mention 1000. And invoice also you check. In the invoice, 1000 units only must be there, 100 rupees only must be there. If at all in the invoice price has been changed, we will not approve it. We will not approve. So vendor, the third party would have sent you an invoice, right? Once the goods are delivered to you, that invoice has to be approved. And two-way match or three-way match, guys. What is a two-way match and three-way match? Purchase order, 1000 units be ordered, sir. Goods received, 1000 units be received, sir. Vendor also billed 1000 units only, sir. And how many be ordered? 100 rupees, sir. Goods received also 100 rupees, sir. Invoice, vendor invoice also 100. So this matching is called three-way matching. Are you clear? And now actually four-way matching also being done, e-way bill. Today they are doing four-way match also, but in exam you just have to write two-way match or three-way match. Two-way matching means what? Purchase order and invoice. Three-way matching means what? Purchase order, GRN. Both are our internal evidences, whereas vendor invoice, external evidence, because third party is giving it. That's it. Next, then auditor has to test purchase control cycle for its effectiveness. So if the controls are effective, it reduces substantive check. Like, what is controls over purchase cycle? See whether there is a competitive quotes, whether purchase order numbering is there, whether purchase order authorization over certain limit is there, generation of GRN, quality inspection, two-way match, three-way match, invoice authorization. You know what? Now in exam they can ask you either controls over purchase cycle, or they can ask you control points over purchases. Anything they can ask you. And you know what is a hack? The hack is, you write controls over purchase point is there, right? You write the same answer, add one more point here, numbered purchase orders. Here no H is there, right? G one more point you add, whether purchase orders are serially numbered. Just mention that, whether purchase orders are serially numbered, add that point alone. So whether they are asking purchase cycle question, whether they are asking control points over purchases, you write the same 8 points, your answer will be corrected, you will get the marks. That's it. This is the hack. That's it. Next, then again there are some special considerations to check whether purchases really occurred or not. Suppose company recorded purchases, is it really occurred? How do I know that really occurred? I will verify. See that I will compare purchase invoices with original copies, and I will see whether company recording purchase only when the risk and reward is transferred, means only when the company took the delivery, only then purchase has to be recorded. Then invoice should be in the name of the company, yes or no? And see that input tax has been booked in separate ledger, ITC ledger, and confirm related party purchases are at arm's length price. See that the related party transactions are happening at arm's length price, and see that if whether these purchases are capitalized or expensed based on professional judgment. Suppose we are purchasing machinery, we should capitalize. If at all we are purchasing machinery, we should capitalize. If at all it's a revenue expenditure, we should charge it to P&L. And journal entries, no, check journal entries. Is there any unusual purchase amount? So identify exceptional purchase transactions. That's it. Then we need to check analytical. Many times this was tested, guys. Analytical. Perform analytical procedure for reasonableness of purchase quantity and price. Perform analytical procedure for reasonableness of purchase quantity and procedure. Analytical. What we need to? Consumption analysis. Compare raw material consumption with previous year and ask management for variation. How much raw material we consumed this year? How much raw material we consumed last year? Why this year there is a huge consumption? Ask. Compare stock composition with prior period. What is stock composition? Last year raw material how much? Last year raw material how much? Last year work in progress how much? Last year finished goods. Composition, stock composition. Last year 30% raw material, 40% work in progress, 30% finished good. This year 2020 60 is there like this. So composition we should compare. Then compare credit turnover ratios and stock turnover ratio with prior period. Compare credit turnover ratio with prior period and reconcile closing stock with opening stock, purchases and consumptions. Reconcile closing stock, opening stock and purchases, all that. In exam they can ask you direct question. While conducting audit of purchases, one of the important procedure is analytical procedure. What are all analytical procedure that we need to perform? 1. Stock consumption analysis. How much inventory is consumed, raw material compared to last year? 3. 2. Stock composition analysis. What is the stock composition within the total closing stock available? How much is the raw material? How much is the finished good? Like that. Stock composition analysis. And then I will compare credit turnover ratio and creditor turnover ratio and stock turnover ratio. I will do reconciliation with opening stock, purchases, consumption. I will reconcile closing stock to reconcile the closing stock with opening stock, purchases and sales. So whether closing stock is correctly arrived or not. Remember, these 3 items are interlinked, guys. These 3 items, purchases, sales, inventory. These 3 items are interlinked, guys. Analytical procedure point will be sometimes similar. That's it. Next. So this is regarding purchases, guys. Important point I have covered. Next, guys. Next I will go with incomes. How to do audit of incomes. How to do audit of incomes. Now first of all, what is income? Other income means what? Any income not related to entity's core business operations. Any income not related to entity. For example, Reliance Industries Limited is there. They are crude oil refinery. For them, they are getting interest and dividend income. That interest and dividend income comes under other income because that is not from the company core operations. That's it. Now, for example, interest on FD, interest on loans given to third parties, returns on mutual fund investments, dividends on investments. These are all other incomes. Yes or no? Now, how a company will recognize the dividend here? A dividend is recognized only when the entity right to receive payment is established. First condition, right to receive payment is established and probable that economic benefit will flow to the entity. Only when that benefit will come to the entity, means company only will collect it, and the amount is reliably measurable. Remember, this can be tested as an MCQ. So what is the recognition principle for dividend? Dividends are recognized in P&L only when right to receive the payment is established. When a right to receive is established? When the company declared it. When the other company declared the dividend, then only we have a right to receive. And see that the benefit will probably flow to the entity. Means as on the time when the amount is being credited, we will only be receiving. See whether that point is there or not. And see that the amount of dividend is measured reliably. That is one more important point. Next, guys. Next, further, mutual funds, sale or profit or loss will be there, right, on mutual fund transaction or investment purchase and sale. See that it is recorded as other income upon transfer of title. Not only mutual funds here, not only mutual fund, even investments. If a company buy and sell shares, investments, any profit or loss is there, we will route it through other income only. And how the loss or gain is determined, it is a difference between redemption price and carrying value. Redemption price is nothing but selling price, man. So selling price and carrying value in the books, if there is a difference, the difference is either a profit or the difference is either a loss. That's it. Now, what is the audit procedure? In this, occurrence alone is required. In this, occurrence alone is required. Guys, whatever topic I'm revising, only that you touch later on. Only that you revise later on also. Now, occurrence. See that recorded other income was earned during the period. For example, if it is an interest on fixed deposit, how we will verify? First, I will get a list of FDs. I'll ask companies, sir, what are all the FDs that the company is having with various banks and FIs? What are the recurring deposits the company is having with various banks and FIs? I will get a list of FDs. What is the rate of interest applicable, and how many days it was outstanding when we deposited as on 31st March? What is the days? And verify calculation of interest by recomputation. Company has already calculated interest and accounted as other income. I will check, I will recompute the interest calculation. I will see outstanding deposits at balance sheet date and get direct confirmation from bank as on 31st March. In the current assets, I will go and see cash and cash equivalents. I will see fixed deposits, and I will go and get a confirmation with the banker directly. Sir, in our company these many deposits were shown in the bank. Is this deposit there or not, really genuine or not? I am getting evidence on occurrence, guys. Occurrence means what? Company showed interest income on deposits. Interest, fixed deposit interest, is it really occurred? How do I know whether it's really occurred? You saw company balance sheet, company bank account, go and ask banker, direct confirmation from the banker. Next, reconcile interest income with bank confirmation from form 26As. Reconcile bank confirmation interest income from form 26As. Form 26As is nothing but TDS related details will be there in our company login ID. Our company will have a PAN number, right? Log into the company income tax portal. Form 26As will be there. In that, how much interest as per banks company got. This form 26As information will contain incomes details of the companies. These details were given by banks and finance institutions. That details will be there. That's it. Then for dividends, verify recognition in P&L is only when the company right to receive payment is established. How do you verify profit or loss on mutual funds? See that the mutual fund investment profit or loss on sale is recorded only on actual transfer, and the difference between redemption price and carrying value will only be recorded as either profit or loss. And verify mutual fund statement, nothing but demat statement. The company will have a demat account, right? Verify demat account. You will understand whether there is a gain or loss on the company. That's it, guys. Disclosure requirements. How disclosure? Other incomes have to be disclosed as 4 points. How much is interest income? How much is dividend income? How much is the net gain or loss on sale of investments, and any other non-operating income? Net of direct expense. Net amount only you should show. Here also net. For example, company sold 2 investments at a profit of 10,000. Another 3 investments at a loss of 20,000. So net is minus 10,000 loss. So net amount only we should show in the other income, guys. Net amount of gain or loss on sale of investments. Same way, remaining any other non-operating income, net amount only we should show. Net of direct expense we should show. That's it. So these are the disclosure requirements for other incomes, guys. Next, audit of sales. Once we complete this, P&L items is over. Once we complete this, P&L items is over. Then the leftover portion will be balance sheet items. In balance sheet items, inventory, trade payable, trade receivable, and then cash and cash equivalents, PPE, intangibles. Once it is discussed, over. This particular revision session will be over. I hope you thoroughly enjoyed. Until now, just reply me. Are you all clear until now? You can comment saying I am in flow, or you can simply say flow, in flow. I am in flow, sir. You can say flow. I hope you are super confident, or you can reply confident. You can reply. You can comment below that you are confident. Yeah. Yeah. Thank you. That's it guys. Now sales. Just like purchases, we saw we should first understand what is the entity, purchase, process, production center. Sales also we should understand similar thing. First we should understand what are the sales and recollection cycle. First we should understand this. Understanding the organization, this is most important. First, whenever we are doing audit of sales, we should first understand sales or understanding of the organization. Like auditor must obtain knowledge about business and revenue center. There it is. There in purchases, purchases and production centers. Here it is revenue and business and revenue centers. Like what products company is selling, what is the demand for these products, what are the major products for the company, major customers for the company. Is the company discontinued any product during the year? Check out. And sales terms and conditions. We should also check for sales terms and conditions. Just a minute guys. Sales terms and conditions also you should check. Then we should understand what are the management controls on the sales. So what are the understand management controls over sales. In exam they can ask you this itself as a 5 marks question. Or understanding the organization, knowledge about the business and revenue centers. This point if they ask 5 marks question. They can ask a control point on 5 marks question, or common controls as a 5 marks question. But when they're asking 3 and 4, either understanding of controls on sales they ask, or common controls on sales, anything they ask. Okay, you need to write like this. Somebody is asking, sir, 10 minutes break before balance sheet. Yes, before balance sheet audit, after I finish sales, I will give break. May not be for you, but for me, I need a break. So 10 to 15 minutes, we'll take a break and then continue with balance sheet items. Now look at. So auditor examines management controls over sales process, such as same sales also segregation of duty will be there. Just like purchases. Authorization. Whenever customer ordered us, we won't directly deliver. We need to authorize the sale order. Then we need to issue the invoice. Then we need to deliver the goods. Then we need to recognize the sale in the books of accounts. And if at all it's a credit sale, somebody in the company has to authorize the credit limit, guys. That's it. Then apart from that, there are some common controls. Auditor test controls to assess the strength and reliability. If controls are strong, substantive testing can be reduced. Deficiencies in controls must be reported. Remember, when you are checking internal controls, if any deficiencies you identify, the deficiencies you have to communicate to top management and management as per SA 265. Then common internal controls. What are common internal controls over sales? See that sale invoices are pre-numbered. See that sale orders must be approved. Customer purchase order authorization, authorizations for write-offs. Here you write, write-offs are authorized. Just one point, write-offs are authorized. And see that invoices are pre-numbered. That's it. So whether they ask common control point on sales, or whether they ask management understanding controls over sales, both are same. Okay, segregation of duty must be there. Who check credit limit? Like invoices are pre-numbered. Yes or no? Authorizations, write-offs are authorized. Issuing of invoices, delivery of goods, recognition of sale. And see, you need to check these controls. Why? If the controls are strong, you can reduce substantive testing. If there are any deficiencies you identify, you should report it to the top management as per SA 265. So that's it. This is regarding sales. Next, in the sales audit, first we'll see disclosure. Very rare disclosure can ask, but sometimes disclosure can be asked. You need to, for non-finance companies, MCQ can come. A disclosure requirement can be tested in the form of MCQ. For non-finance company, how sales has to be disclosed, how much is from products, how much is from service, how much amount is received as a grant or donation, and how much is any other operating revenue. Whereas for finance companies, the revenue is disclosed as interest how much and other financial services how much. That's it. Then occurrence. How do you check whether sale really occurred or not? How the sale is really occurred or not? Means whatever sale recorded in the books, is it really happened or not? How do you check? So see that sales which is recorded in books is not overstated. Not overstated means that there should not overstated means what? It should not be a dummy sale. Like what do you mean by that? See that sales invoices are not duplicated, and cancelled invoices should not be recorded. A cancelled sale should not be recorded. And see the journal entries. Get customer confirmation for sales. No, if at all you are having a doubt, get third party confirmation. Ensure no fictitious customer related sales are recorded. There are no fictitious sales are recorded. And see that shipments means deliveries were authorized by customers. See that we deliver goods, right? We should receive delivery confirmation from customer. And whether unearned revenue is recognized. Unearned revenue means what? Nothing but we didn't deliver the goods. We didn't deliver the goods, but we recognized this. Whether significant threat about uncollectability is there. See whether collections, is there a certainty on the collections. Review invoice sequence and sales returns ratio. Invoice sequences we need to most important. Invoice sequence means what? Invoice number 1, 2, 3, 4, 5, 6. That sequence has to be continuing. If there is any missing invoice number, why it is missing? Is it a cancelled sale or what exactly it is? And you should also see sales return ratio. This year sales returns to sales, how much is the ratio? Last year sales returns to sales, how much is the ratio? And see journal entries for unusual sales. See, is there any sale transaction where suddenly huge amount is there? Look at, match sales returns with supporting documents. If there are any sales return, is it genuinely a sale return or what exactly? You see, sometimes no, generally what happens is March ending, suddenly we show high sales. In April month, sale return will be there. That's a proof that that's a dummy sale probably. So that's it. So that is what completeness. All sales made during the year, they must be recorded without understatement, without overstatement. You should perform cutoff procedure to ensure revenue is recognized in the correct accounting period. Cutoff means what? You know, cutoff errors will usually arise when companies recognize revenue based on invoice date rather than delivery. Tell me, in accounting standard also, when you should recognize a sale transaction only when you deliver the goods, only when the risk and reward is transferred, not based on invoice date. Am I right? So cutoff errors will generally come in a company. Cutoff errors will come if the company is recording sale based on invoice date, not based on delivery date. That's why in those companies, when you're doing audit, you should be very careful. Sir, last 1 week March month, no invoice you give me. When the goods were actually delivered, check out. Only delivery date must be the basis for recording the sale. That's it. Verify credit notes issued after year end to know potential fictitious sale. Very simple, guys. Sometimes no, March last week sale we will record, April first week sale return we will show, but for this year profit is already overstated. So check whether is there any sales return in the next month first week. If so, see whether it's a fictitious sale or is it a genuine sale return. Check out. Trace shipping documents to sale journal entries. Check if quantity appears in the sales register. Reconcile stock records and financial records. You know, here something we should really blame ICI. What? This and all is old method. The same matter is there when I am studying. Now it is completely online. Companies are accounting sales online. Transactions are online. There is happening. Companies are using enterprise SAP software, ERP software they are using. Do you think all this shipping document, sales register, all this is there now? Unfortunate thing. Sometimes we need to study outdated syllabus. Sometimes ICA has updated the syllabus a lot. Now they need to update this chapter. Technically speaking, many points in this chapter were very outdated. Fine. That's it, guys. This is related to sale. Now substantive analytical procedures on sales, guys. Auditor will perform sales trend analysis, month wise trend, year to year trend analysis. I will compare with prior period. I will also do category wise. Suppose company is dealing with 5 products, all the product wise analysis I'll do. Last year 5 products were there. How much is the sale in the last year, and this year how much is the sale? And I will develop a sales expectation to compare with client record. This year I will develop how much is the sales that is going to happen at the beginning of the audit, and once series are completed, I will see how much sale actually made. Examine sales prices, average monthly price and discount policies. So substantive analytical, a 5 marks question also can come, a 4 marks question. So write about substantive analytical procedures over sales. First, sales trend analysis, comparison with prior period, category wise sales, build a sales expectation, compare with actual sales records, and see that verified discount policy of the company, what is the average monthly price and what is the sales price. That's it, guys. So this is regarding sales audit. With this, P&L items is also completed. Guys, we completed one more element, P&L items, regulatory information, both we completed. Then we are having balance sheet items. Till now 1 hour 45 minutes non-stop without interruption we discussed, and very good that more than 350 students are in live throughout this 1 hour 45 minutes. Really good for your dedication. That's it. We'll just take 10 to 15 minutes gap and then continue balance sheet item. Another 1 hour it will take balance sheet item. I thought of finishing within 2 hours, but I don't want to discuss rapidly and finish it off. I just wanted to really add value to you. And guys, trust me, we are going to rock balance sheet items just like how we rocked P&L and additional regulatory information. I hope your confidence is increasing, and I'll be very happy if you say some appreciation and like the video. Don't miss to like the video. That's it. Just 10 to 15 minutes. We'll come back and then continue. And right now it is right now it is 8:17, guys. We will resume the session by 8:30, 8:32. Okay, we'll resume the session by 8:32. That's it, guys. 15 minutes. Just relax, take a breath, and come back. Another 1 hour non-stop. By 9:30 we will finish items of financial statements topic, guys. That's it. Okay, that's it. How do you remember? Some student is asking, sir, I'm understanding everything, how to remember? After we finish the session today night itself, 1 hour to 1.5 hours or 2 hours, just read and try to understand. From here on I will also tell you how to remember these points. See, honestly, there is no technique on how to remember. Honest, I'm telling you, there is no technique on how to remember. You read, understand, and try to sync, you remember better. In fact, ARI and P&L items is to some extent easy. Balance sheet items remembering is even more difficult, but I will tell you a technique in the balance sheet items. Logic I will tell you more clearly. That's it, guys. Okay, yeah, fine, guys. Okay, just we'll continue after 15 minutes, guys. Yes, guys, let's continue. Let's continue, guys. Yes, let's continue the balance sheet items. Okay, I hope I'm audible. Perfect. I just had some fruits and then coconut water and then returned. So we'll go to the balance sheet items, guys. First, quickly let us finish one after one. You will see a remarkable learning now with respect to balance sheet. Yes. Now, see what we need to verify here. In items of financial statements, what exactly we need to verify is basically assertions. Assertions we need to verify. And I request you to watch my assertions video. I have previously uploaded one topic called audit evidence revision also there. In that revision, a 500 series discussion is there, right? In that assertions topic I covered. Just watch that, okay? So I hope you have watched it. Now, for P&L, income statement. For income statement, what assertions we verify generally? We verify for P&L account occurrence, completeness, cutoff, measurement, presentation, and disclosure. 5 assertions we focus on. Occurrence. Occurrence means what? Did the transaction really occur? Is the transaction really occurred? And is it something related to the entity that we are auditing? So is the transaction really occurred and related to entity? That's it. For example, see that employee benefit expenses incurred during the period, is only for the staff personnel employed and exclude unauthorized personnel. Occurrence focuses on real expenditure. Its objective is to ensure there is no overstatement. The objective is no overstatement. For example, sales. How to test in sales occurrence? See that sales represent goods actually ordered or delivered by the company, and it is dispatched and invoiced during the period. It is not a fictitious one, it's a real one. So this is what occurrence assertion focuses on. Then completeness focuses on all. See that all employee benefit expenses accounted for every employee, all the employees. See that all genuine sales are recorded. Completeness focuses on, is there any understatement? Completeness focuses on, is there any understatement? Nothing. But completeness focuses on, did the company miss to account any sale? That did the company miss to account any employee benefit expense? That is what focused on completeness assertion, guys. Then cutoff focuses on right accounting period. See that P&L items, transactions are accounted in the correct accounting period. For example, see that employee benefit expenses, whatever they accounted in the P&L, it is related to current period only, and sales include dispatches made at year end belonging to relevant period or not. Then measurement, just a minute, sorry. So measurement, see that transactions are recorded accurately. At what price you are recording, that is measurement. For example, employee benefit expenses are calculated correctly, deductions are correctly accounted, all that. And see that sales are recorded at correct invoice amount, that's called measurement. Presentation, transactions are classified, presented fairly in the financial statements, which are complete and accurate. So for employee benefit expenses, see that everything is correctly disclosed without omission. Additional employee benefit expenses, we should show salary, ESOP and then welfare expense, all that. For non-finance companies, employee revenue from operations has to be disclosed as products, grants, donations, other operating, less excise duty, like that. That's it, guys. So this is a brief introduction to assertions concept. Now, what assertions we should test in balance sheet? Now let's begin balance sheet. What assertions? For balance sheet items, assets and liabilities, we should check, is the asset existing? Is the asset existing? Is the asset owned by us, rights and obligation? Is the asset valued correctly? All the assets are accounted correctly? And cutoff. Basically, cutoff is an item which is generally coming for P&L items, but very rarely cutoff we will use for balance sheet items, especially for inventory. Cutoff is very popular for inventory, guys. Okay. Now, so existence means what? Suppose in the balance sheet there is an inventory 10 crore is there. What is that trying to tell me? As on 31st March, 10 crore worth of inventory is physically there, existence. And it is also trying to tell me total inventory value is 10 crore, completeness. It is also telling me this is the inventory that is physically there in the godown as on 31st March, within the control of the company as on 31st March, cutoff. It is also telling me that this 10 crore is the value of the inventory which is valued at cost or NRV, whichever is lower. This is what it is asserting me, yes or no? So with respect to balance sheet item, what assertions we need to test? See that asset is in existing, see that all the assets are accounted, see that assets are accounted in the correct accounting period, see that the assets are valued properly, and see right. Asset is a right, liability is an obligation. Remember, asset we call it as right, liability is an obligation. For liability, the assertion name is obligation. For asset, the assertion name is right. Okay. Then obviously see that presentation and disclosure. See that the assets are properly classified, described and disclosed, and disclosures are complete and accurate. For example, inventory, we show them as raw material, work in progress, finished goods, stock in trade, stores and spares, and loose tools. We will have to show goods in transit separately. Mode of valuation must be stated. Goods with third party also we should show separately. That's it, guys. Now the actual balance sheet item, here in balance sheet, let me discuss in important order point of view. By the way, guys, until now we finished additional regulatory information, P&L items thoroughly we understood, right? Items of financial statements weightage is what? 12 to 16 marks. From ARI, from P&L, 8 marks weightage will come. Now we are going to discuss another 4 to 8 marks worth of portion. If it is assuming 16 marks, then 8 marks worth of portion we are going to discuss right now. Okay. In this balance sheet items, I will only go by my instinct. What I feel important, I will cover. Okay. So whether you're writing May 26 attempt or Jan 26 or September 26 or Jan 27, this particular important items, what I'm going to tell is really, really important. Okay. Now look at equity. If you ask me, nothing is important in equity. Okay. Share capital, just 1 minute, guys. Yeah, fine, let's continue. Some fruit seed I had, no, So it's irritating in the teeth. Okay, fine. Now I removed it. Fine. Next, disclosure of share capital. So what we need to disclose in a company share capital. So what we need to disclose for each class of share. For example, a company might issue multiple class of shares. See, for listed companies, there is only one class of equity shares generally, but there is a possibility of multiple classes. For each class of share, how many number of shares were authorized, how many were issued and subscribed and fully paid up. So authorized, issued, subscribed, paid up details. Face value, and what is the opening shares and closing shares, reconciliation of opening number of shares and closing number of shares. What are the rights to the shares, preferences for those shareholders, what are the restrictions on each class, rights, preferences, restrictions on each class. And we should give key shareholders list, any shares held by shareholder having more than 5% face value, sorry, more than 5% of the total company paid up capital, that we need to give. And shares reserved for options, contracts, disinvestments, that we need to give. For the last 5 years, another important disclosure, the company in the last 5 years, in every balance sheet notes to accounts, in the last 5 years, is there any bonus shares, fully paid shares issued without payment in cash, any shares issued as bonus shares, any shares bought back. Now here, without payment in cash means non-monetary consideration. Are there any shares issued by the company for non-monetary consideration in the past 5 years? Are there any shares issued at free of cost, bonus shares? Are there any shares bought back? These three details a company has to give. Sometimes in exam they may ask you, in the last 5 years, shareholders, shares related information, something has to be given by the company. What is that? Shares issued for non-monetary consideration in the last 5 years, shares bought back in the last 5 years, bonus shares issued in the last 5 years. Company has to give that disclosure. Then again, a company shall disclose shareholding of promoters, like shares held by promoter at the year end and percentage change, who is the promoter, how many shares is holding, and how much percentage of total shares is holding, that we should give. And if funds from issue or remain unutilized, suppose a company raises some money, preferential allotment, private placement, IPO, FPO, if any unused money is there, disclosure has to be given on unutilized amount. Remember, this disclosure will come only in standalone financial statements. It will not come in consolidated financial statement, guys. This is the most important disclosure, most important discussion in share capital. In share capital, if you ask me what is important, is disclosure is very important. Rest all other you can easily manage, guys. Okay, now one more important thing which my concern says is valuation of equity. Okay, if shares are issued at premium, see that the premium is recognized in securities premium account. And remember, premium can be used only for certain purposes, like for securities premium can be used to issue fully paid bonus shares, writing of preliminary expenses, redemption premium, premium to be used, premium on redemption, and writing of discount on issue of gold, and for buybacks. The securities premium can be used only for these 5 purposes. See that the securities premium utilization is only for these purposes. Then again, shares issued at discount. Generally, a company is not permitted to issue a discount, am I right? Except sweat equity shares. Yes or no? Further, auditor should verify, is the company issued any shares at discount to its creditors as a part of debt restructuring scheme or a statute resolution plan? Check out. If there is such kind of scheme, then no problem. That's it. That's it. That's it, guys. Share capital point is completely done. Then reserves and surplus, guys. Reserves and surplus. Sometimes in exam they can ask you reserves, meaning they can ask you what is a reserve. Reserves are nothing but these are the amounts which are taken from P&L profit. From the profit, no, we allocate some amount for some purpose, that we call it as what? A reserve. Reserve is an appropriation out of profits which is not for the purpose of liability, not for contingency, not for commitment, not for diminution in value. These are not reserves, guys. These are all provisions, guys. Reserves are something which is an appropriation out of P&L for some specific purpose. That purpose is not a liability, not a contingency, not a commitment, not a diminution in value of the asset. Other than this, anything else is called as reserve. Are you clear? Next, what is the purpose of reserve? Reserves are again 2 types: revenue reserve and capital reserve. Revenue reserve and capital reserve. Revenue reserve is available for distribution or purposes like supplementing profit in lean years, financing business expansion, augmenting working capital, strengthening financial. These are also called as free reserves, guys. Capital reserve, like capital redemption reserve, debenture redemption reserve, revaluation reserve, these are all capital reserves, guys. These are not available for distribution. These are used only for specific limited purpose, like securities premium is a capital reserve. Capital redemption reserve is also a capital reserve. Yes or no? Now, if revenue profits are appropriated for asset replacement purpose, then that reserve is also called as capital reserve. That's it. Now, in this entire thing, disclosure requirement, guys, disclosure for cap equity and reserves and surplus, disclosure requirement is most important. Now, how should we disclose reserves and surplus? No, we should classify as below. As per schedule 3, reserves and surplus has to be shown as below. How much is capital? How much is CRR? Capital reserve is how much? Capital redemption reserve how much? Securities premium how much? Debenture redemption reserve how much? Revaluation reserve how much? And share options outstanding how much? And any other reserve, dividend equalization reserve, like that, any other reserve. Okay, special economic zone reinvestment reserve, foreign currency fluctuation reserve, like that. So many reserves were there. Suppose in P&L debit balance is there, it must be shown as a negative figure only under surplus. Remember, when you're showing reserves, you must show surplus separately. Surplus means what? Balance in the P&L account, should disclose. So balance in the P&L after appropriations and all, whatever balance left, that's called surplus. Example, this surplus can be used for dividends, bonus shares, or transfer to, for, or from reserves. That's it. So this is regarding reserves, guys. Okay, now let's continue discussing about borrowings. In borrowings is most important, many times tested borrowings. Okay, so borrowings, what we need to check. Every point is important. In borrowing, every point is important. First, how do you verify whether a borrowing is existing? Suppose company had a loans. How do you verify? First, ask the company what are the loans the company borrowed. Get a confirmation from the banker. Download borrowing loans and agreements, loans and borrowings agreements will be there. Look at those agreements. All this will give you evidence on existence of borrowing. Yes or no? First, existence. How do I know? All borrowings on balance sheet represent valid claims by the banks and third parties. So whatever borrowing that is there on balance sheet, it's nothing but some third party claim on the company. Now, review board meeting minutes to confirm approval of new lending arrangements and significant. Sometimes in exam, how they'll ask, they'll give you this option and they will ask you, is it existence? Is it completeness? Is it valuation? Is it disclosure? They'll ask you the assertion. They'll ask you this assertion. Okay, somebody is asking, sir, can I skip balance sheet item? If at all you do not really have a time, yeah, you can skip, but just another 1 hour, that makes a difference. That makes a lot of difference. This 1 hour, whatever I'm covering, only that you try to cover in exam. At least for MCQ purpose, you watch this if possible. That's it. Now look at, so reviewing board meeting minutes to confirm whether new lending agreement are there, or is there any significant debt commitment. Like in the board meeting, they might have entered into commitment, they might have passed a resolution that we will take a borrowing. That is an evidence for existence of borrowing. Okay, then look at the loan details, comparing with the loan agreement. Look at the loan agreement and check the loan details. How much is the loan, rate of interest, all that. This is also an evidence for existence. Next, obtain balance confirmation from the bank, from the third party who lent us. They lent us the money, right? Get a confirmation from them. By getting a confirmation, you get evidence for, yes, borrowing is existing. You get a confirmation from that. In case of hire purchase or lease contracts, again, compare the contracts with agreements. And in case of debenture borrowings, look at the debenture trust deed. Confirm discharge of assets for retired debt. If any debt is repaid, the asset is created for charge, discharge. Asset should have been discharged from the charge. And get a representation from management confirming liabilities represent valid claims. I will ask a representation from the company that all the borrowings whichever they accounted, they are really a liability against the company. These are the points I will focus on. Existence. To check whether the borrowing is really existing or not, I will focus on these points. Then completeness. The second point that I will have to check is completeness of the borrowing. Completeness, whether all the borrowings are completely accounted or not. Auditor has to get an evidence that all the borrowings have been accounted for in the books. How do I know whether all the borrowings are accounted? I will see subsequent transaction after reporting period for unrecorded liability. I will see after 31st March is over, suddenly in April a new loan is recorded. When the loan actually be received, that you should check. Sometimes companies, they get a loan on or before 31st March, but they will not record it on or before 31st March. Okay, they will record it in April. So check subsequent period. Okay, then get again balance confirmation for borrowings. Ensure interest rate, due dates, collateral, and everything matches the records. Compare balances with confirmation. Send reminders for non-reply. When you are using external confirmation, if they don't reply, send a confirmation request. and trace borrowings to general ledger. Again, this is an outdated point, guys. Today, general ledger topic, all this is not there, outdated point. But what to do? In exam, sometimes you have to write this. Get a schedule of short-term and long-term borrowing showing opening balance and closing balance, and see whatever borrowings taken and repaid during the year. Pay attention to that. So get a list of all the borrowings, see whether they are all accounted correctly or not. So this is how we need to do completeness audit. Sometimes in exam they'll ask you, review subsequent transaction after reporting period. This is an example of existence, example of completeness, example of rights and obligation. What like that they can ask you. Remember, they have asked in previous attempt or that previous attempt a similar question. Next, valuation. Second, the third thing that we need to understand is valuation. Valuation means what? At what value borrowing is recorded. Tell me, borrowing shall be recorded at what value? Outstanding loan plus accrued interest. That interest that we should pay, right? That accrued interest. If any penalty clause is there, and if at all we didn't pay EMI on time, if there is any penalty, that penalty should also be added. Yes or no? So whether interest is accounted correctly, look at the loan agreement. Look at valuation. Ensure accounting policy for borrowings are consistently applied. Recompute interest and verify amortization of premiums and discount. If it is a debenture, any premium on debentures, that also has to be accounted regularly. And for foreign currency loan, verify closing rates and restatement as per accounting standard 11. Verify due dates. What is the due date of repayment of the loan, and accordingly classify. If it is falling with the next 12 months from balance sheet date, it's a current borrowing. If it is not falling with the next 12 months, it's a long-term borrowing. Compliance with Companies Act 180, 185, 186, and confirm borrowings are within the company's articles of association MOA limits. See that the borrowings are within the powers of the company, and verify whether installment of long-term loans that are due in the next 12 months are shown as current liability. Read loan agreement. Sometimes only this point they can test. While verifying borrowings, one of the important point auditor has to do is reading the borrowing agreement, loan agreement. What points auditor will see in that loan agreement? In one of the items they asked this question. Now first of all, when I'm reading the loan agreement, what I will check? What company did in reality, what is there in the loan agreement. Is the company compliant with the loan agreement? Look at, ensure the entity is in compliance with loan covenants. Covenant means what? Terms and conditions. Covenant means what, guys? Terms and conditions and other significant provisions. Is there any provision with which the entity not complied? Suppose in the loan agreement some terms and conditions were there. Whenever there is a non-payment of EMI on due date, will attract a penalty of 10,000 rupees. Now company during the year 2 EMIs they have not paid on time, but provision for penalty they didn't create. Check out that. If enforcement of the provision has been waived by the lender in case of breach of any covenant, obtain a confirmation. For example, just now I told, sir, 2 EMIs company did not pay, right? 10,000, 10,000, 20,000 penalty should have been levied, right? But the penalty company did not account, sir. I went and asked management, why you did not account? Management told, sir, lender waived it, sir. Get a confirmation from lender for any provision of amount, if at all any provisions has been waived. So if enforcement of any provision, like actually lender has a right to levy penalty for late payment of lender has a right to levy penalty for non-payment of EMI, right? So if at all penalty is waived by the lender, get a confirmation that he really waived it. Suppose he is not confirming it, then that's a real liability. Company has to recognize, company has to make a provision for it. Then verify default related clause, just now I told, and make sure required disclosures are properly made in the financial statements. So when you are reading a loan or debt agreement, you should pay attention to these points. See that all the loan covenants were complied. Okay, see that the entity is complying with the loan covenants, and if any provision is identify, is there any non-compliance? For any non-compliance of any covenants, any terms and conditions company has not complied, see that lender waived any charges or penalty, and see is there any default related clause, and make sure disclosures are correctly made. That's it, guys. That's relating to valuation of borrowings, guys. Then coming to disclosure of borrowings. What we need to disclose? Long-term borrowings and short-term borrowings. What we need to disclose? Long-term borrowings will be classified as bonds and debentures, term loans, deferred payment liabilities, deposits, and loan from related parties. How long-term borrowings show? How much is for bonds and debenture? How much is in the form of term loans from banks and FIs and related parties? How much are deferred payment liabilities? And how much of them are deposits, loans, all that. Deposits means what? Public deposits or any other loan from related party. You should show breakup like this. Further, we should give breakup on secured or unsecured, We should also give details about terms of repayment, and if there is any default, period of default, that also we should see, and all that. That's it, guys. Okay, next. Then borrowings part completed, and you see ARI we discussed already. That's the reason quickly balance sheet items we are finishing it off. Now next, trade receivable. Actually we are supposed to discuss trade receivables immediately after sale. Technically speaking, we should discuss immediately after sale. Now anyhow, first you need to test controls for trade receivable, a 5 marks question. What are the controls for trade receivable? A 5 marks question. Remember, what is a trade receivable? Only when you make a sale, a debtor will arise. Correct? Points to ensure effectiveness of internal controls over sales as a part of trade receivable audit. When you are checking debtors, there are some control points you should check. First one, only a sale on credit basis will raise a debtor. Only a bona fide sale will create a trade receivable. Check that. Second, see that sale is made only to a genuine and approved customer. Remember, do you think a company will sell on credit to somebody who is unknown to them? No, they will sell only to a known and approved customer. The company directors or company management has to approve a customer. Only then the sale will be made on credit to the customer. And see that all the sales are properly recorded. Only then the trade receivable value will be correct. And debtors can only be settled either by cash collection. How a debtor account will be settled? Either he paid it, or with approval of a responsible officer, we will write it off. Any of this will happen. Then duties related to sale transactions are segregated. See that segregation of duties are there with respect to sales, like sales order receiving, and then goods dispatching department, and collection people, accounting people, all that are different. Accounting, collection, reminders, everything. And see that debtors are collected on time. If there is any overdue customer, company should have a process of sending reminders, taking a legal action, and debtor balances are reviewed by the company regularly. See that the company has a mechanism, control to review debtor balances, and see that there is a follow-up system exists, and adequate provision for bad debts is made using aging analysis. So companies know they will create provision for bad and doubtful debts using aging analysis. See that it is there. That's it, guys. So controls over trade receivable, a 5 marks question can come directly. Next, audit procedure for trade receivable. Inside this, existence is most important. How do you get evidence on existence of sales receivable? How do you get evidence on existence of trade receivable? How do we get the evidence on existence? Very simple, direct confirmation procedure. You send a confirmation, third party, external confirmation as per 505, you send a confirmation, third party will reply. That itself is an evidence that the trade receivable is existing. Like what are they? Use direct confirmation procedure. For all significant account balances, do direct confirmation. Whereas and for small amount, randomly you verify. For all significant debtors, send direct confirmation. For small items, NCR you send. Non-negative confirmation request you can send. And remember, the trade receivable may be requested. We will send a confirmation request, right? What we will ask in the confirmation request? We can ask two things. One, either ask him to confirm on the balance sheet date what is the outstanding amount, or ask some other date you select which is close to balance sheet date. So for example, 25th March, which is not a balance sheet date, I'll ask later, sir, on 25th March, this is the last transaction happened with you in the financial year 25-26, sir. Last transaction with you happened on 25th March. As on 25th March, how much is outstanding balance? That auditor can ask. So the auditor can ask confirmation from third party to confirm what is the outstanding balance, either on balance sheet date or on any date that is near to closure of the balance sheet date. MCQ can come. Third one, the date, for which date confirmation should be asked? It is decided by auditor after consulting with the company. Further, now the form of request. How can you request? How can you raise the request? Of course, positive confirmation, negative confirmation, any of this you can use, but the form of request can be, what, like you can send a confirmation, sir, we are the auditors of so and so company, sir. We found that you are a customer for our company where you have to pay us approximately so and so amount. I will put 10 lakhs money and I'll ask him, please confirm yes or no. Or I will put a blank. And I'll ask him, sir, I am mentioning blank amount. Please fill the amount and then send me. Any of this way can be asked. Both the forms are permitted. The form of request can be one format is one form where balance outstanding you will mention. Form with balance outstanding and customer responds whether he will agree or not. Second format is what? Without any balance. You just put a blank, and where the customer shall respond with balance outstanding as per his record. He should type and send. Guess what? Here the response rate will be low, whereas here the response rate will be high. If at all you mention the amount, customer will say yes or no directly. But if you ask him to fill, he need to open the books, open the ledger, open the balance, and he need to confirm whether the balance is correct or not, and then has to fill it and then send. So second form is little time taking. This is one of the factor while designing a confirmation request. This is what something we discussed in 505 standard already. I hope you have watched audit evidence revision already. Okay, it was just 2.5 hours, 6 standards I revised in audit evidence. Wonderfully I revised it. Please use that. Next, further, auditors shall maintain strict control over confirmation request and handle replies independently. The auditor should maintain entire control on the confirmation procedure, and every reply that auditor is getting, tell me, direct confirmation means what? Third party should reply to the auditor directly. Auditor should evaluate each and every reply correctly and see that when you are sending confirmation letter, see that it is correctly addressed. When you are sending a confirmation request, see that its address is validated and see that it is properly dispatched, and all replies come directly to the auditor and not to the client. And the auditor should not reveal the method of selecting trade receivable for circulation until trade receivable trial balance is received. So don't tell the company how are you going to select the customers for external confirmation, and give the client only final list of selected receivables so that they can prepare confirmation letter. Look at this point here. The client will prepare confirmation letter. We will send mail to the debtor through the client, guys. Through the client we will send the mail, and the third party has to reply us directly. We will mention in the mail directly like that. And suppose, sir, I'm not getting confirmation reply, sir, then perform alternative procedure. How do I know whether debtor is really existing or not? Look at April month and May month. He paid money. Subsequent cash receipt is a proof that he is outstanding, right? That's it. And confirm that these transactions actually occurred by preparing detailed analysis with a transaction breakup. Now, April or May month, no, amount has been received 10 lakhs. Now this 10 lakhs is received, this 10 lakhs is received relating to some 3 sale invoices. Map it. That's it. These are the alternative procedures. And not only that, apply analytical procedure for debtors. To know whether debtors are really existing or not, apply analytical procedure. What I will see, I will review a trend line of sales and accounts receivable to check whether there is any unusual trend. I will see April, May, June, July, August, September, month wise trend. I will see last year to current year sales trend. I will see, and I will measure average collection period. So I will first compute. You might have learned in working capital management chapter, financial management subject, you might have learned how to compute debtors holding period. Compute that and look at the company credit terms. Sir, 30 days only there, but here for us 60 days debtors is outstanding. Why? Okay, make inquiries for reasons in change in trends with management. Document the same in working papers. Look at analytical procedure for debtors. Only this can be asked as a 4 marks question. Direct confirmation procedure. Only this can be asked as a 5 marks question. Or any of these points they can test and ask you as an MCQ. Any way they can ask. Important topic. Trade receivable is important topic, guys. That's it. That's it, guys. Valuation, another important aspect in trade receivable is valuation, guys. So see how companies identifying doubtful debts and calculating allowance, provision for bad and doubtful debts. Review the process followed by the company for identifying slow debtors and then creating provision. Obtain aging report. You know, the best way to calculate provision for debtors is first look at the age of the debtor. Age means what? Are they outstanding for more than 3 years, more than 2 years, more than 1 year, more than 6 months, between 0 to 6 months? What is it? Are they overdue or not overdue? That also you should understand. So get an aging report, compare the aging report with the prior period reports. Yes or no? And identify, is there any debtor under litigation, and see whether debtor can be collectible or not. See whether the debtor can be collectible. Somebody is asking, where can I download this book? Opens rest of a CACMA website, free resources. You can download P5 auditing, new GOAT notes 2026 version. There you can identify. Look at it, guys. This is one of the wonderful material. Everything is, you know, very, very colored. So everything is colored. Fine. Don't worry. Fine. I'll continue. Let me not deviate. Next, so identify debtors under litigation and see provision for that particular debtor is calculated correctly, and provision has to be calculated at right rates. The rates of provision is generally decided by board of directors. Verify if any bad debt is written off. See that it is only by authorized person. Generally board of directors approval is required. Prepare movement of bad debts, provisions and write-off amounts and compare with last year. Prepare a movement of bad debts. How much bad debt in this year, last year? How much is the provision in this year and last year? Write-off amounts, all that. Check write-off or write-offs are under proper authority. The fifth point and seventh point are repetition. Yeah, same point they're communicating, but that's what they have given in the book, and that's what we also mentioned here. That's it. These are the points that we need to check for valuation. So in valuation, what are the points we need to focus on? See whether provision is collected. Debtors valuation means what? We sold goods, so amount outstanding, that itself is value. But sometimes we can't show the value of sale. We should show any doubtful debts are there, provision we should remove, and then show the net value. Valuation focus on provision calculation, bad debts, all that. Are you clear? Next, disclosures related to trade receivable. Sometimes an MCQ can come. Disclosure, what we need to disclose. If at all any foreign currency receivable is there, AS11 restatement points we need to disclose. Related party transaction we should disclose, and report transactions under 189, and also check schedule 3. Now we need to disclose debtors in 4 classification, guys: undisputed and disputed. Again, between undisputed, disputed, 2 more subclassifications are there. Receivables which are good, receivables which are doubtful. Even in undisputed, disputed also considered good to doubtful, both. Now here, how much is outstanding from the due date of payment? This is only overdue debt, guys. Overdue debtors, guys. Overdue, which means first you should show net debtors not overdue. How much is not yet overdue? Means as on 31st March is a debtor, still due date is there. Oh, not overdue, how much? Overdue more than. Up to 6 months, 6 months to 1 year, 1 to 2 years, 2 to 3 years, and more than 3 years. Up to 6 months overdue, more than 6 months to 1 year overdue, more than 1 year, more than 2 years, more than 3 years overdue. And accordingly, we should show breakup like this. Yes or no? Again, debtors we need to subclassify. How much is secured, how much is unsecured, how much is doubtful. Most of the companies, trade receivables are unsecured. Then again, disclose bad and doubtful debts under relevant head. Separately disclose how much amount is due from the director and officer and key managerial persons of the entity. That's it, guys. Debtors audit is over, guys. Easy. Just comment below whether you understood debtors thoroughly. Almost 2.5 hours at a stretch. 2 hours 20 minutes almost. And good part is, every one of you, even though you have exam very immediate day, you are still focusing, and very good. Hats off to you all. I really wish you all give the attempt wonderfully this audit paper, bang exemption, and you must all come back and then tell me that yes sir, I got exemption. And all, don't forget to comment below this video after you write the exam. This video or audit evidence revision you might have watched, right? Or my marathon you might have watched, right? Please come back and comment how did you perform well. I'll be really happy. That's it. Next, and immediately after exam I'll be releasing answers also. Don't worry, immediately within 10 to 15 minutes after the paper come, I'll be releasing answers also, so you can cross check. Then cash and cash equivalents, guys. In cash and cash equivalents, completeness is very important, guys. Completeness is very important. How do you check whether cash and cash equivalents are completely accounted? For that, we generally do BRS. So we need to ask the company bank reconciliation statement for all bank accounts and verify periodically they are preparing or not, and ensure authorize the signature. See that whether BRS is properly signed, because a company will account transaction. When a check is issued, they'll account. When a check is received from customer, they'll account. But in the bank, only when the check is cleared, it will be recorded. Yes or no? Now, to that extent, a reconciliation statement has to be prepared, right? That reconciliation statement will give you a complete picture about whether bank balance is completely correctly accounted or not. Now look at verify BRS. What I will verify in the BRS, guys? In the BRS, what I will verify in exam? Sometimes I'll ask you verification of bank reconciliation statement. What points auditor has to focus on? A 5 marks question they can ask you. Bank book balances must match bank confirmation and statements. Checks issued but not presented. Ensuring subsequent clearance. Ensure whether it is subsequently cleared or not. Checks be issued but not presented, and see that it is subsequently cleared. And if there is any over more than 3 months, reclassification. Verify checks are deposited but not credited. Checks are deposited based in the company. We got money from customer, we deposited, but it is not yet credited in our company name. Using bank deposit slip. Review unrecorded bank charges or credits and ensure management adjust material amounts. Honestly, today BRS is not that popular again. Okay, most of the companies today, since online electronic transfers are happening, check usage reduced a lot. Since check usage reduced a lot, the BRS relevance is decreasing over a period of time. Next, get a direct confirmation. To confirm balances from banks, auditor shall obtain 100% confirmation from all banks and FIs. Okay, and you need to agree book balances to balance confirmation or bank statement. You download bank statement from internet banking and then see, download. For any discrepancy, get an explanation from the bank. And for non-replies, perform alternate testing. Suppose if at all bank is not replying, today bank confirmation we don't do, directly we generate bank statement from internet banking. That's it. Then disclosure. Disclosure is also important in cash and cash equivalents. We need to show cash and cash equivalents as below: balances with banks, cash on hand or checks on hand, and others. And separately we need to disclose earmarked funds. For example, unpaid dividend money, we need to keep it in a special bank account, keep it. Share application money received, we need to keep it in a special bank account, mention it. Money, CSR money, unspent money, we should keep it in a separate bank account, we should keep it. Those bank accounts are called as earmarked balances. Again, state balances held as margin money or security. Suppose if at all you are having a margin money in a demat account, show separately. And mention repatriation restrictions. If at all you are having any money at outside India where getting that money transferred in India, some restrictions are there, mention those restrictions. Disclose those deposits with maturity period over 12 months separately. Suppose you have a fixed deposit with the bank where the maturity is after 12 months only, disclose that item separately. That's it. Under cash and cash equivalent only you will disclose. Because FD, even though it is maturing after 12 months, don't think it's a non-current asset, it's a current asset only, but you need to disclose it separately. Are you clear? That's it, guys. Then audit of inventories. Inventory means what? Any asset held for sale. The asset is held by me just to sell it, or asset which is held in production, that's called work in progress. That is what? Work in progress. Held for sale is nothing but finished good or any material supply which I will use for production. This is called raw material. So inventory consists of raw material, work in progress and finished goods, guys. Then valuation. What is the valuation principle? Inventory must be valued at lower of cost or NRV. In the entire balance sheet item, most important thing is inventory, trade receivable and PPE. These three are most important: inventory, trade receivable and PPE. Yes or no? By the way, remember, we already covered borrowing, we already covered share capital. Borrowing is also very important, guys. Borrowing is also very important. Okay, next. So, and the valuation principle has to be followed consistently on year-on-year basis. And if at all any changes in accounting policy, it must be disclosed. Now, what is the procedure for inventory audit? Most important procedure: existence. We should get evidence, which is as per 501 standard. We should get evidence on existence of inventory as per 501. For existence, what auditor will do? He will participate in physical inventory counting performed by the management, and where auditor will do a test counting also. So, what points you observe? When you are attending physical inventory counting, you observe. What you will observe? How management is counting. Observe the count plan. Ensure supervision. See, is there anybody from the top management or somebody from higher level of management supervising the physical inventory count? Check that. Observe how the instructions are followed. Observe whether inventory supervision is done, physical count, and check that inventory items are tagged. Inventory items are properly recorded, and reconcile test count. Reconcile test count means what? For example, I went to the go down, one of the employees counting in one particular rack. In the rack, he said 44 items are there. You also go and see how many were there, 44 really there or not. That's called test counting. Okay, and you will see the tax and summary sheets, and you will be alert for empty boxes. Sometimes in some racks empty box will be there. Employee will be counting that empty box also. Go and try to touch and hold, just try to push it. You will understand whether that's an empty box or real box. And conduct cut-off testing, especially last 1 week March month purchases, April 1 week purchases, 1 week sales, March last 1 week sales, April first week sales. See when they were delivered actually, when they were actually received. See whether that is accounted in the inventory correctly or not. That's it. Next. And when you are checking inventory existence, when you are counting physical inventory, see that third party stock is omitted. Third party stock should not be considered in inventory counting. And investigate differences between physical stock and then recorded stock. In case of perpetual inventory system, counting can be done on any date. Auditor can do physical inventory counting on any date if the company has a perpetual recording, perpetual inventory. Suppose if the company is following periodical inventory, March 31st compulsorily you must attend physical inventory counting. Periodical inventory counting shall be undertaken at year end compulsory. So these are the procedures that we need to perform for existence of inventory. So ask entity when are they going to do counting, and you participate in that physical count activity. Verify consigned goods are segregated separately, and when you are participating in inventory counting, you observe how the count plan is. See, is there a supervision? See that items are tagged, reconcile the test count, stay alert for empty boxes, conduct cutoff testing. These are the points that we need to focus on. Are you clear? Next, then again, you need to check completeness of inventory. In that, performing analytical procedure is important. Now look at industry average. What is the industry average inventory they are holding, and what is the inventory closing balance as per budget, and look at the trend. This is analytical procedure, guys, very important. Next, compute inventory turnover ratio, especially cost of goods sold to average inventory ratio. Compute that. Conduct vertical analysis. What is the inventory to total assets, man? How much is inventory to the total assets? Total balance sheet asset value 10 crore, inventory 2 crore, then 20%. This is vertical analysis. Then inventory turnover ratio. What is the inventory cost of goods sold divided by average inventory? Turnover by inventory you can put, or cost of goods sold by inventory you can put. Compare budgets with actuals and verify non-financial information related to inventory such as weights. So look at non-financial information. The moment they say non-financial, it's analytical procedure. They say compare, it's an analytical procedure. Analysis vertical, this it's a analytical procedure. Inventory turnover ratio, it's an analytical procedure. Comparing with industry averages, budgets and trends, analytical procedure. So what is the analytical procedure for audit of inventory? 5 marks question is possible. Somebody saying, sir, not feel like studying. Do one thing, take some 15 to 20 minutes or half an hour break and then come back and study. You will definitely come back into form. See, the main reason for sorrow, the main reason for worry is we continuously think about the result. We continuously think about the result. Will I perform better? Will I perform better? Will I perform? Forget about it. Focus on, I have to study better. I have to study well. I have to cover this, I have to cover that, and forget about the result, forget about how we are going to perform in the exam. Focus on what you are doing now. That's why live in the moment, be present, always give your best in the present. You will really do well. Tell me, what is the necessity for me at this time? Past 2.5 hours, I'm continuously in the live. You can see my voice is already stressed. Beginning of the session, my tone. Now what is my tone? Morning today, I already took 4.5 hours session, and now I'm taking 2.5 hours. Imagine 7 hours of session in a day. It's not that ordinary. It's not ordinary, guys. Only dedication. I know. I have to grow in my life. I have to make an impact. I have to change students' perception on audit subject. If my desire, my willpower is so strong, obviously my energy supports me. I am not worried. Will I really get through? Will I become India's top faculty for audit? I am not worried about it. But whatever I need, whatever I have to do to become number one, I am doing everything every day. Yes or no? Whether I'll become or not, that's God's choice. I am not worried. So don't, if you're not feeling like studying, if at all you're feeling demotivated, you're constantly thinking about the result, don't think about the result, guys. Okay, next. So next, one more thing, guys. Ownership, valuation. Another important thing is, guys, valuation of inventories. Another important thing is valuation. Verify what valuation method company is using, because either they can use FIFO or they can use weighted average. Which valuation method is suitable? Look at the how business. Suppose if they're selling old goods first, then FIFO. Suppose they are selling any goods, whatever they want, then weighted average. So see which method is reasonable. For raw materials, no value, how the inventory has to be valued for raw material, cost, inward, carriage inward, non-refundable duty we should add. If standard cost technique is used, what is the basis for standards? Compare with actual cost. Standard cost technique is famous where, ma? In retail stores and all, standard cost technique is famous. Work in progress. See, ascertain valuation of production stage. Remember, work in progress is highly influenced by stage of completion. Overhead allocation and compare with costing and financial date mentioned. Ensure cost of abnormal wastage, ma. Just a minute. Yeah, ensure cost of abnormal wastage. For finished goods, verify reasonable cost is included or not, and see that inventories are valued at NRV only when the finished goods are going to be sold at less than cost. Then only raw material will be valued. And most important, obsolete, damaged and slow moving goods. This is most important, 5 marks question. We need to pay, whenever you are focusing on valuation of inventory, the first point that we should see is there any damaged inventory? Is there any slow moving inventory? old obsolete inventory. The auditor has to examine, is there any damaged inventory, slow moving inventory, obsolete inventory, so that you can do a proper evaluation, and ask a client for inventory aging split. What is inventory aging split? You know, when the goods were manufactured and as on 31st March, how long it's been that they were manufactured. That is called as inventory aging split. Okay, whenever we manufacture an article, it will have a tag, manufacturing date or manufacturing month will be there. So that month to balance sheet at 31st March, what is the duration? So you will easily identify obsolete stock data and see whether they were still saleable with, just like any other latest stock. Identify if they are saleable at latest stock along with latest stock parallelly without any reduction in value, then they can be valued at cost. If obsolete, slow moving old inventory, if at all you can't sell them at current market prices, value them at NRV. And compare recorded cost with actual cost for obsolete items. Calculate inventory turnover ratio, identify obsolete inventory if ratio is significantly lower. Inventory turnover ratio, check it out. If at all inventory turnover ratio is reduced, inventory turnover ratio reduced means what? Repetition, number of times inventory being rotated reduced, which means there is a high chance of obsolete turnover. You might have seen inventory turnover ratio in ratio analysis and financial management. Yes or no? There you might have understood. Verify correct application of cost of inventory and NRV principle on obsolete goods, because obsolete damaged goods we always value at NRV. And test overhead allocation rates in manufacturing. See how overhead is allocated between inventory items. That is one more important test we need to. Actually, for obsolete and obsolete and damage, first these 5 points only important. These 5 points are very, very important. Then finally, disclosures. Inventory has to be disclosed as raw material, how much work in progress, how much finished good, how much stock in trade, how much stores and inventory, stores and spares, and then loose tools. And disclose goods in transit separately. And you should also mention mode of valuation separately. That's it. That's it, guys. I hope until now everybody is clear. Until now everyone are clear. Guys, just reply until now whether you're all clear. Inventory, done with inventory. Comment below. So productively we are going, no? Actually, so intensely we are discussing past 2.5 hours, and every one of you really cooperating well. Another 15 minutes we are going to wind up the session. Another 15 to 20 minutes, this items of financial statements chapter will be over. Okay, so which we discussed with real productivity, especially ARA, P&L items, inventory, trade receivable, cash and cash equivalents, share capital, reserves, everything we discussed. Next, guys. But remember, guys, listening to the class alone, listening to this session alone is not sufficient. After finishing this, 1.5 to 2 hours if you spend reading, trust me, tomorrow in the exam you're going to rock. That's it. Next, property, plant and equipment. In this, most important questions I highlighted here with yellow, you see, very important. They can ask you in exam, what are the elements of cost will be included in PPE? What are the elements of cost that are included in PPE? What are the elements of cost? PPE cost, what cost will include? Obviously purchase price plus import duty, which is non-refundable. Imported duties, non-refundable taxes, less discount, that you should eliminate, purchase price. And any directly attributable cost to bring the asset to present location and installation. Any directly attributable cost to bring the asset, imported machinery, to factory. And cost of dismantling, removal, restoration, decommissioning, we call it as decommissioning liability. Tomorrow after 20 years we need to dismantle this machine, we need to restore the site. For that, how much cost you are going to incur, present value you should calculate, and that also you should capitalize. So what are the components of cost of PPE? What are the components of cost of PPE? What one is purchase price. Purchase price means what? Amount paid to exporter if at all imported machinery, okay, or amount paid to vendor plus imported duty which is non-refundable, and any less, of course, a discount and rebate, plus any cost that you incur to bring the PPE into present location, and dismantling charges, decommissioning liability, all that. Now, sir, what are directly attributable costs, sir? Very simple. Employee benefit expenses. For example, no, we are using some employee, daily workers for trial run. So whatever expenses that we incur on trial run, salary expense we incur, that we need to capitalize. Site preparation charges. So to bring the machine and then install, the site has to be prepared, the site has to be ready for some issues, for some particular base work. Initial delivery and handling charge, installation and assembly charges, testing cost and professional fee. And when you're capitalizing test run, when you're capitalizing trial run, when you do trial run, some goods you will produce, right? That goods you will sell, right? That sale value should reduce from trial run cost. So trial run cost net of proceeds from sales. That's it. So what are examples of directly attributable cost? 5 marks question can come. Or another question can come. What is the cost excluded from PPE? 5 marks question can come. What are the costs that are excluded from PPE? The following cost will be excluded. Examples of cost not form part of PPE. What are the costs not form part of PPE? Cost of opening new facility. Suppose you open a new factory, opening celebration you did. That is not a capitalized cost. Inauguration, nothing but. Cost of introducing new product or service, like you launched a new product, you did massive advertisement. That advertisement and all will not form part of cost. Cost of business in new location, staff training, that is not a PPE cost. Administrative cost. In exam they can ask you this: what are the items of cost? 4 or 5 marks question they can ask you, what are the items of cost that are not included in PPE? They can ask you, what are elements of cost? What are the items of cost not included in PPE? 5 and 7 both put together will be there. That's it. Next, what is the audit procedure? What is the audit procedure for inventory? In this, mainly that point only is most important, ma. Okay. Just a minute. I think this is enough. Actually, in PPE, this is what most frequently tested. These are all what most frequently tested. By the way, when I can recognize a PPE, only when future economic benefits will flow to the enterprise and cost can be measured. And what cost includes? Cost initially incurred to acquire or construct, and any additions or replacement or servicing cost. Entirely this is to be considered. Correct? Huh? Now here there is one important point I wanted to discuss, guys. Wait. Look at assets which are not in working condition. If an asset is there, PPE, which is not in working condition, or you are not actively using, the organization is not actively using or not in working condition, will be accounted as deletion. You should remove it as a deletion only. You should remove it as deletion only after approval by the management, and depreciation should be stopped after the date of deletion. So suppose on 10th August 2025 you are stopping the machinery from usage. You are not actively using, you are deleting it from the asset register. And now that deletion can be done only after management has been approved it. Further, depreciation should be stopped after the date of deletion. So this is this is treated as a proper deletion. Assets which are not in working condition, which of the following statement is true? Like that an MCQ can come. It was asked in one of the previous attempts. So if the asset is not in working condition, first the asset has to be deleted only after approval of the management, and depreciation must be charged up to the date of deletion only. That's it, guys. Next. So, and rights and obligation is important, guys. If there are any additions, suppose company purchased some new machines during the year, look at the invoices, purchase invoices, see that they are in the name of the entity. For land and buildings, sale deed, registration deed will be there. And verify original title deeds only. Suppose sir, properties is pledged as security, sir. Title deeds are with the banker, sir. Get a confirmation. Request a confirmation from the lenders that they are holding the title deeds, and review charges register for any charge that is created on PPE. Okay, that's it. So sir, if time permits, can you show questions will come from this area? Everywhere I'm telling that only how a question can come. Okay, fine. So review register of charges for any charges created. So if any charges are created, just look at the register of charges. You will understand what are the charges that are created. Any fresh loans were taken, all that. So rights and obligation, very important point, guys. What is the point? For any additions, verify the invoice. For buildings, verify the sale deed. Ask original title deeds. If the bank says, sir, building is in mortgage, sir, title deeds are with the banker, sir, ask a confirmation for list of documents. LOD, we call it as what? LOD from the bank. Ask list of documents from the bank and review register of charges. That's it, guys. PPE is over. Intangibles is almost similar, but in intangibles we will look at examples of intangibles. What are they? Some scientific or technical knowledge, design, all that. Like common examples are computer software, patent, copyright, customer data, franchisee, market share, goodwill. All these are intangibles. Now physical substance, sometimes an intangible asset is there in a physical substance like CD or a pen drive. Now we need to look at the physical substance value there. Some intangible assets exist on physical media. Cost of physical substance is usually insignificant. Such physical item, even though the intangible is in the form of a pen drive, we will still treat it as intangible. So some assets, they have inseparable intangible and tangible. For example, phone is there. A phone is there. A phone, it's inseparable. Software is important, hardware, both are equally important. So judgment is required, whether that's a PPE or whether that's an intangible. So judgment is required, which is most predominant element. For example, software integral to hardware. Example, mission tool software, computer operating system is treated as fixed asset. Software, if it is not integral, then it is treated as intangible. If software is integral, then it is treated as fixed asset. If software is not integral to hardware, then that software is treated as intangible. For example, mobile, you see, software is no doubt important, integral to this mobile. This entire mobile I can classify this as, this entire mobile I will classify this as fixed asset. If at all, this mobile is not at all important, software is not that integral, then I will show it as what? Intangible. Then audit procedure for intangible. Same, if any intangible is not in active use, if intangible is not in active use, see that deletion is recorded only post approval and amortization ceased post approval. Amortization has to be stopped, okay, from the date of deletion. Same point we saw in PPE. That's it. Intangibles, there is nothing much important. That's it. Again, trade payables. If at all trade payables is completed, I think loans and advances is there. Loans and advances and provisions and contingencies. I think that's it, guys. 3 more elements. I'm trying my level best to hold me because fully tired now, but it's okay. Trade payables, guys. Again, in trade payables, what is important? Again, existence, because existence of trade payable is important because of direct confirmation point. This itself can be asked as a 5 marks question. Now, then any other point, I'll come back to it. Presentation, guys. Disclosure details of trade payable, MSME disclosure, trade payable aging report disclosure. Okay, fine, I'll come back to it. Okay, first I will cover disclosure. How trade payables has to be disclosed. We need to disclose separately for MSMEs, guys. What we need to disclose? Unpaid principal amount, how much? Suppose I purchased goods from an MSME. How much amount is still unpaid? And what is the interest amount unpaid? That we need to show. Interest paid under MSMED Act and payment made beyond appointed day. Interest paid under MSMED Act, how much? How much interest you paid? Because now under MSMED Act, if you pay after 15 days or after 45 days, you have to pay interest, guys. And payment made beyond appointed day. I mean, nothing but how much payments are made beyond appointed day, beyond 15 days, beyond 45 days. How much is the accrued interest? Accrued or unpaid interest at the balance sheet date, how much? Right now, there are some MSME vendors to whom I have to pay within 45 days or within 50 days, but I have not yet paid. As on balance sheet date, it's already overdue as per appointed day concept. How much interest is accrued? That we need to account separately. And further interest remaining due and payable even in succeeding years. Suppose I have to pay interest related to some MSME. Last year only it was outstanding, but even this year, as on this date, still it is not paid. So that interest also we should show separately. Next, we need to show aging analysis for debtors, guys. How we need to show? We need to show MSME and others. Again, undisputed. These two are undisputed. Again, disputed, we should show MSME and others. If at all MSME name comes, it's trade payable, guys, not trade receivable. In trade receivable, aging analysis is undisputed considered good, undisputed considered doubtful. Disputed considered good, disputed considered doubtful. This is the classification of trade receivable, guys. But for trade payable, MSME word will come. If the word MSME comes in aging analysis, that's nothing but trade payable. Again, trade payable, outstanding for following period from due date. Overdue trade payable. Overdue means what? Already due date crossed. We crossed already due date. We should show less than 1 year, 1 to 2 years, 2 to 3, more than 3. Remember, 6 months logic is not there for trade payable. Only less than 1 year, 1 to 2 year, 2 to 3, more than 3. That's it. Less than 1 year. Less than 6 months logic is not there. Very simple. Less than 1 year, 0 to 1 year, 1 to 2, 2 to 3, more than 3. That's it. That's it, guys. Then existence of trade payable. First, you can use direct confirmation. You can use direct confirmation. Send confirmation request to vendors, okay, for significant payables and material purchases. Confirm balances either on balance sheet date or any other date which is near to balance sheet date. Same thing we saw in trade receivable. The date will be decided by auditor after consulting with the company. The form of request may be either the form where balance you will mention at the year end and ask the party to confirm, or the form will be no balance wherein creditor has to respond. And never method of how are you selecting trade payables for confirmation, never reveal that method of selection to third parties, I mean to the company. Ensure proper dispatch and receipt of confirmation replies. For non-replies, perform additional tests like reviewing subsequent payments, vendor invoice, all that. That's it, guys. So this is regarding existence of trade payables. Only existence is important, guys. That's it. In this trade payable, existence is important. Then other current liabilities. If the company has any other current liability, we need to give the following disclosure. Other current liabilities will be given as following disclosure. Remember, this is a disclosure requirement. This itself can be asked as a 5 marks question. What is the disclosure requirement of other current liabilities? First one, current maturities of finance lease obligation, interest accrued but not due on the borrowing, interest accrued and due on the borrowing, income received in advance, unpaid dividend, application money for allotment, nothing but share application money pending allotment. Okay, sorry, application money, refundable application money, guys. Sorry, share application money pending allotment comes under share application money pending allotment comes under equity. Share application money pending allotment will not come here. Application money for allotment of securities we received but is subject to refund. Money received for securities allocation pending refund. Disclose terms including number of shares, premium, all that. Specify if the company has sufficient authorized capital, reasons why there is a delay in allotment, non-refundable and refundable how much. Non-refundable application money show under equity, refundable application money show under other current liabilities. Very important for MCQ, guys. That's it. Audit of loans and advances. Companies sometimes give a loan and advance, right? How to audit that? In this, I think loans and advances is not a big deal, guys. Disclosure point is important in loans and advance, guys. Disclosure. Suppose the company gave a loan and advance which is a long-term loan. It is classified as capital advance, related party loan, other loans. Subclassify. Is it secured, unsecured, and doubtful? Disclose elements for doubtful loans under relevant head. Separate disclosures for loans due from the directors and from companies or firms where directors are partners. Yes or no? So classified as how much is capital advance, how much is related party loan, and how much is other loan. Again, you should show secured, unsecured, doubtful. See, loans and advances we should show 3 types: capital, related party, and other loans. That's it. Short term also a similar disclosure, guys. Next. About to finish, guys. Audit of provisions and contingencies. Provisions and contingencies. Audit procedure. Disclosure alone is enough, guys. Disclosure. Long-term provisions. How much is for employee benefit and how much is for others. Short-term provision. How much is for employee and how much is for others. Contingent liabilities. 3 classification. Claims on the company, but company did not acknowledge. Claim is there from third party, but company not acknowledged as debt. Guarantees given by the company. Any other contingent liability. Then commitments. Capital contracts not provided for, where any some capital contract is a provision is not yet created. Uncalled liability or other commitments. Partly paid shares, partly paid investments, uncalled liability, and other commitments. These are the remaining items, guys. That's it, guys. I'm done for today. 3 hours almost, just with a 15 minutes break I did. 3 hours I did just with a 15 minutes break, non-stop 3 hours. Entire items of financials predominantly we discussed, guys. Okay, in fact I explained you in detail almost. I hope every one of you thoroughly enjoyed. Okay, so and somebody's asking, sir, can you do different types of entities? I'm really tired, guys. My chart revision is also there. You can watch the chart revision for different types of entities where I gave a reasonable amount of explanation, or my old revision videos were there on different types of entities: corporate society audit, government audit. You can just type see a Ram Harsha government audit, see a Ram Harsha corporate societies audit. You can find my old videos. The content is same, guys. You can use that. That's it. So I'm stopping the live session. Okay, and I wish you to comment below this video. Now you are in the live chat replying, right? Comment below the video once I end the stream, once I complete this live. Just comment how is your experience. I'll be really happy to listen to you. Just it takes 20 seconds to comment. That's it. And those who forgot to like the video, just like the video. And really thanks for your extreme cooperation. Every one of you were continuously active throughout this particular session. I'm really happy for all of you, and really wish you all the best for the exam. And I know you all come out with banging exemptions. Right now, in the past 3 hours, the dedication that you showed itself is reflecting how dedicated you were. And really, I didn't expect that 3 hour students will be there. You know, that too well before exam, just before exam, like 3 hours. That shows how dedicated are you. And now, after this session is over, 2 hours, guys, 1.5 to 2 hours, you spend reading once again this. I'm damn sure I'm telling you, 12 to 16 marks in the coming exam, you rock solidly perform, guys. That's it. Okay, that's it. Thank you. Take care.